एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Yeah. So good evening, friends, or rather good afternoon, friends. Welcome back for the fourth session on the Saraswathi Pooja Tax Audit report series. We've been having an overwhelming response for this series, and it is very heartening to us at SIRC that these initiatives are being received with so much of enthusiasm from all our members, and we decided to do this as an online series because we wanted more members to take benefit of the experience of all the senior speakers who have generously accepted to come and share their knowledge and experience with all of us here. And today we have CAR Sundararajan, who is very well known. I don't think he needs to be introduced to anyone here, and he's a person who actually helped us in putting to shape this program and curating the topics. So thank you very, very much for helping us to do this series so successfully. And friends, I wanted to inform you before that we will be having some sessions on charitable institutions also, and we hope to do it in a hybrid format, provided we get the approval for the same, because we are calling some senior speakers and we want the benefit of the speakers' experience and their knowledge to be taken by all the members across SARC. So please do watch out. We will be sending you messages on social media as well as by emails. So I'll straight away go to introducing our speaker faculty, CAR Sundararajan, a very, very senior chartered accountant and a very good friend who never says no for whatever we ask for. He is a fellow chartered accountant and managing partner of SRBR and Associates, a firm with 4 decades of practice, having offices at Chennai and Kochi. He is a qualified information systems auditor from ICAI, and he is specializing in the areas of audit and assurance practice and is the lead partner in various corporate audits and PSUs. He has mentored and created more than 100 chartered accountants from his stable, and many of them are well settled in industry, banks, including World Bank, MNCs abroad and also in practice. He has been addressing almost all the branches of SIRC of ICAI on the topics of bank audit, audit and assurance standards, accounting standards, tax audit, corporate audit, due diligence review, code of ethics, etc. Like I told you, he is our go-to person for any topic. And he's a visiting faculty in institutes of cost accountants and company secretaries, CAG, staff training colleges of RBI, Indian Bank and IOB. And he has also co-authored a book on bank branch audit released by CASE Chennai. He's been a part of groups of ICAI on various topics of professional interest on guidance notes, revision, corporate audit, accounting and auditing standards, etc. and has been co-opted to various committees of ICAI, Delhi and SIRC on corporate laws, members in industry, CPA, etc. from time to time. And he has been a co-opted member of the Center for Audit Quality Directorate, ICAI. And he has been a member of the FRRG formed by ICAI for reviewing the financial reports review for listed and large corporates. And he has been a convener of the Chartered Accountant Study Circle and has conducted many workshops, seminars, and annual conferences. and he has held positions of Treasurer, Secretary, Vice Chairman, and Chairman of IFA, SRC, and Treasurer of IFA India branch. And he is currently the Executive Committee member of the International Fiscal Association India branch, New Delhi. And notwithstanding that he's a professional, he's also a very socially active person. He's in active social service and is contributing to the welfare of the society by supporting education of poor children of the society, sponsoring the ailing temples in Tamil Nadu rural areas by ensuring daily pujas are held regularly. And he's an active lion and a regular blood donor and also a consistent contributor to social needs of the society. And he's an active member of trust supporting downtrodden and economically weaker sections of the society. I think this is a very, very brief profile of Sir and all the activities that he is involved in, apart from being professionally involved and contributing to ICAI and SARC and the members. Thank you very much, Sir, once again for your generosity in accepting to share your knowledge and also in curating this entire series for us. So I hand over the proceedings to you. Thank you, sir. And friends, sir is also going to take answer all the queries which has been raised by the senior chartered accountant about whose queries have been answered by the other members also. Yeah, over to you, sir.
Thank you, Chairperson. Thank you for your
Yeah.
really liberal and generous introduction. Because
generosity begets generosity, sir.
Because that's too long an introduction. Because actually speaking, whenever you have such a large introduction, the expectation also galore. I have to ensure that the expectation is being met at least to some extent. What best possible, I will definitely do that.
We have utmost confidence in you, sir. Thank you very much.
Thank you very much. And good afternoon to all the members here who have gathered for this virtual session. Invariably, I have a reservation to take up the virtual session because obviously I will not have a body language of the members visibly in our perspective. So I will be finding it difficult whether whatever I have been addressing is reaching the people or not. It will be taking some time. But unfortunately, as the technology oversteps our professional activity, let us go with this. We have to live with this. I am okay if anybody wants to have questions in between, but it's ideal to have questions after some time, probably maybe half an hour or something like that. I will give a break at that point. You can raise your hands. The point of discussion today is in respect of critical issues on tax audit, because the structure of the program was made in such a manner. Initially, we wanted to have an introduction, and subsequently we wanted to discuss on class by classes. And finally, we thought of having what are all the issues which are being faced by various tax auditors and also the clients. So in this scenario, we have to be very, very clear. These issues which I am going to discuss now or in the subsequent 1.5 hours might have been addressed by the respective persons also. Whoever has handled that respective classes, they would have also touched upon that. But still, I thought this session can be an overall conclusion of this program, so that whatever is possible to be expressed to you, and from your side, if it is having any further questions to be answered, that also can be done. And anyway, I will share this presentation after the session is over, so that it will be circulated to all of you. My mail ID is there in the presentation. If at all you have any subsequent queries, you can definitely raise on that. I will be very happy to share whatever little knowledge which I have gained over a period of 3.5 decades of experience. And basically, I am a person who always talks on experience more than anything else regarding the theory, because section is very much available. 44B is a small section. 44AD is a small section. Form 3CD is a very limited form, only 44 classes. All of us are very much aware of what is to be read in by way of a theory. But what I could always achieve in all my earlier experiences, what is practically what we have been seeing, we were able to share. So that gels with the people. So in the same scenario, I will also try to do this as much as possible. The people are expected to respond after some time whenever I call for the discussion. Let me go with the sharing of the presentation. Office bearers, okay, is it?
Yes, sir. This is good.
So the topic, as I told you, is in respect of critical issues. Once again, I will downsize this. Yeah. So critical issues on tax audit of 2024-25 financial year. This is the topic which I have been allotted to. The objective, in my opinion, is to understand few critical risk areas in tax audit, because all of us know what is tax audit, as I already told you. But what are the critical areas which are there, which has to be discussed? Let me look at that. And practical challenges what we face in during the undertaking of the tax audit, that we'll also have to touch up. Compliance gaps and safeguards, and finally, very, very important, which is focus on professional judgment and documentation. Because ultimately, each of us are having different types of varieties of clients. Ultimately, in one particular point, only the professional judgment will come to the fore of our auditors, and whether the professional judgment which we take is right or wrong, only the time will answer. Because we are none of all of us presume, when you take a professional judgment today, we presume it is in perfect order. But whether it is in perfect order or not, it will be coming up only at the later time. So we will have to be more careful when you do a professional judgment, so that we'll be able to justify and face at any point of time. And ultimately, the documentation, as I always refer to any session on audit, SA 230 is very much relevant for all the audits, and tax audit is not an exception at all. So documentation, what all the documentation has to be done, we have to be very, very clear. This is also a critical area, and risk area also which has to be done. Because whatever you did will not be able to be demonstrated if it is not properly documented. So documentation is more critical. I don't say it's than execution, but at the same time, it is more critical when compared with the actual execution, because execution is done by the limbs and toes of our own students. So unless and until they tell us how they have verified it, and we also document it, subsequently we will not be able to defend at any point of time how the work has been completed in a proper manner or not. So what are the key professional issues which are there, and what are the reporting consideration? Compliance versus verification. Very, very important. In Form 3 CD, we do a verification. And for doing Form 3 CD, we're filling up by the student. Of course, we are not supposed to do the Form 3 CD filling up. Earlier, faculty also has mentioned it very, very clearly. It is to be done by the assessees, and we are supposed to verify. So in that scenario, the verification of the data which is being given in Form 3 CD is a simpler version when compared with what all the compliances which has to be done over a period of time in respect of various sections, which is by virtue of the Income Tax Act. Reliance on documents and MRL versus independent verification. Very, very important. The documents which are being given by the clients, we have to rely on that, because we don't have any other item other than the documents that has been provided to us verify, because we also report that the entire audit is only on the basis of the documents provided by the client and verified by us. Okay, that is fine. Whether that is sufficient, or you have to go slightly in excess of that. And also this MRL, management representation, SA 580 deals with MRL in a detailed manner. That's a separate class which has to be taken in a detailed manner. But this MRL, reliance on documents, has to be supported by an independent verification, because independent verification is going to be very, very critical, because they give certain level of documents. Whether the documents are verified, reasonable, sufficient for completing the audit compliance, is only by an independent verification you can do it. Same way in case of MRL also, everything and anything can be taken by way of an MRL. Whether it is sufficient or not, we'll be discussing about the same line subsequently, but at the same time, I would like to mention here itself, MRL alone is not sufficient. We have to have an independent verification for supporting the MRL. Fact-based reporting versus opinion-based reporting. Judgment and professional skepticism is very much required in this particular area. This is basically a fact-based reporting. I am talking about tax audit per se. It's a fact-based reporting. I am not here to express any opinion at all, except for the non-corporate cases where we do the audit combined with this tax audit. In respect of other audits where another audit has been done, we are going to give only a factual reporting. That is, we are going to verify what has been provided in Form 3 CD, whether those things are true and correct. We are not going to say as true and fair view. As the next slide speaks about this, we are going to certify as true and correct when compared with true and fair in all other opinions. Wherever we are going to give an opinion, where there will be a small leeway for us when it is true and fair, we have a leeway. We have to say that we are not going to say as true and correct. But in this scenario, we are going to say true and correct. Whatever be the information which has been provided in Form 3CD, we are going to say as true and correct. So it has a added burden and added responsibility in respect of the auditor. So we'll have to be very, very clear in respect of what is opinion-based reporting and what is fact-based reporting. Complaints of technical standards and essays. Say, complaints of technical standards and standards on auditing is of paramount importance, nevertheless, for tax audit also. Because wherever we are talking about tax audit report, there are some clauses which are going to be talked about certain sections of the Income Tax Act. There are certain sections which are going to be talking about ICDS versus AS. So in those cases, unless otherwise we are thorough with the technical standards which are supposed to verify, I will not be able to talk about revenue recognition. Unless I know about auditing standards by way of 580 or 230 or as it is by way of AS9 by way of revenue recognition, we will not be able to do the justifiable audit in case of tax audit also, particularly in respect of non-corporates. Corporates, there is a leeway available. Somebody else is going to do the audit, unless you are the auditor for both tax audit and corporate audit. Somebody is going to do the corporate audit. At that time, everything would have been detailedly verified. Now we are going to only give a reporting on facts of Form 3CD. Whereas in case of non-corporates, our responsibility is doubled, not doubled, it is actually multifold, because we have to see all the technical standards to be complied with and also standards on audit to be complied with. Next issue is very, very important, significance of peer review and audit quality. What has happened is, in respect of this tax audit peer review is applicable in respect of almost all the chartered accountants now, even though the proprietors are still exempt. But whenever peer review is taken up, when peer review is taken, it is not only for statutory audit functions which is going to be taken for peer review. Peer review is in respect of, I don't know who has given a roundup. Suddenly a roundup is coming there.
Sir, you can off that annotate option.
Okay. Who is rounding? Somebody is trying.
Yes, somebody participates in trying.
I request members to be away from that, because I may be taken aback because I'm going at a specific flow. If something comes and blocks our mindset, we will be at a disadvantage. So significance of peer review and audit quality is important, because peer review does not have any other assurance only. It also includes tax audit is also a part of the item, because in the peer review statistics, the peer reviewer has to mention and pick up at least few tax audits which has been overcome by way of verifying the documentation. So for verifying the documentation, the peer reviewer will definitely ask you for the questions, and we don't know which client is going to pick it up. And if it picks up a sample where we are not having a proper documentation, we are going to be caught in this scenario. And equally, this audit quality. And audit quality is naturally required in respect of all the items, and particularly in view of the next agenda which has come, which is Taxation Audits Quality Review Board, TAQRB, which has come very recently. Very recently means for a couple of years back it has come. This is a very, very serious problem actually, in the sense, because nowadays anybody and everybody, because they want, see what happened is this, why is it come? That's also very important, we have to understand. Because in the first session, when chairman was introducing the entire topic, she was very, very clear and saying that the government is relying on the chartered accountants for ensuring that the tax audit compliance is properly done. But that is not come with a very, very easy joke. Because every year there is a fight which is coming from other professionals who want to enter into the practice of tax audit. So each and every time that the Chairman's Institute has to go and represent it, because we are having the tough knowledge of auditing in a detailed manner. So we only will be able to cover up all these things. In that scenario, the department is also asking, I am talking about Finance Ministry and Ministry of Company Affairs are also saying, how do you determine the quality? How did you verify the quality? So this quality was being properly done by way of a peer review and quality review board in respect of corporates. But in case of non-corporates or other small companies, no monitoring was there. So Institute in its own intelligence, they have decided to have an item called Taxation Audits Quality Review Board, TAQRB. What is the purpose of this quality TAQRB? It will do whatever this QRB was earlier doing, that they will be doing it. They will be picking up accounts, picking up tax audit reports of certain people and ask for information, how it is being done, whether you are doing the following the proper systems and procedures for doing the audit is being verified. So in case Tax Audit Quality Review Board is not satisfied with your documentation, they can refer the item for first level of peer review, and probably they can take it to the disciplinary proceedings also. Why I am talking about this particular item is this disciplinary proceedings is a Damocles sword hanging on our head, because in the first stage itself I told very, very clearly, whatever we are doing as audit and also this professional judgment, it is right at this level. Today's position, it is right. Whether it is right throughout, it will be only test of time. We will not know. After 2 years of time, whatever I have certified today, if I see that, I myself will find a mistake at that point of time. It has to be accepted by any chartered accountant per se. No chartered accountant can claim 100% saying that there will not be one small mistake in our file. That is not the way it can happen. So in this scenario, how it has to be overcome? It has to be overcome only by having a systematic approach to the entire audit, and on that basis prepare a documentation which is very, very stubborn and clear, and that documentation will stand to your support at any point of time. So TAQRB has not started exactly verifying each and every tax audit report. Now they don't have the methodology. They have only by way of a sample which is being taken by way of some lottery. We don't know when my item will fall into the lottery. Whereas in case of QRB, it's only in case of listed companies they will take up. In listed companies, large public interest it is only coming under audit quality review board. Whereas TAQRB, they can pick up any item because they are not decided on how it has to be done. But you all have to ensure that go to the institute's website and go to the quality review board's observation, TAQRB's observations. Then you will be able to understand what are all the FAQs which are coming in the TAQRB. You will be able to understand how much of errors or mistakes members are doing with or without their knowledge. So in this scenario, tax audit, which was earlier taken as a very, very small practice, now it has become a very, very important practice. This has value addition to also to ensure that the members can charge more for the client also, because normally what we understand is, as far as tax audit is concerned, I see many chartered ones who may not be charging in a substantial manner at all. But subsequent to the development in the recent time, this number of tax audits has been restricted to 60, and it has been overcome by a few members who have overstretched their zealous situation. They have done around 100, 200, 300, etc. All those things have gone to the court also, and finally court has decided nothing doing. Hereafter it will be only according to the institute's restrictions, that for deciding the quality, there should be a limitation on number. Now the number is restricted to 60. So when that 60 is also, we are not able to do it in an appropriate manner, it will be difficult. And this year, all of you might have observed that 60 only restricted to the respective members only. Earlier, what happened is, if a firm has around 3 partners, 4 partners, it can go up to 200. It is true. But what happens is, each and every partner will be independently restricted to sign only 60 documents. So you can create tax audit only to the extra 60. If you do it beyond that 60, you are in for a problem. So TAQRB has come to stay. It will be asking for information from any members per se. None of us are exempt from that. When they give a notice, we also need not have to panic. Only thing is, the first level they are asking for the financial statements and the audit report, and how you have reported that. They are asking for the copies. We give that copies. From that, they pick up areas, and in case of any questions, they are asking us a question, and then we'll have to respond. Already things are going on in a smooth manner in many, many cases. We are seeing that. But I'm just telling you, there's an important development which has happened in the recent times as far as tax audit is concerned. We will have to be very, very careful about this. I took some extra time on this because I want people to understand that this is a significant development which has happened in the last couple of years. We have to be very much aware that Quality Review Board is holding that Damocles sword on the head, and we have to be very, very careful about this. Information in Form 3 CD versus financial statements, particularly in respect of non-corporate, new standardized financial statements have come. Fortunately, the Institute has deferred the guidance note for the next year, but at the same time, it's better to comply with that in this year itself, so that you will not have any difficulty or complication in the subsequent years to come. But the point is, Form 3 CD versus FS, and particularly in respect of FS of non-corporate, there is definitely going to be a complication when you have a different figure. Just for an example, I am telling you, there was a case where we had verified this documentation in respect of FS. We have computed at the rate of some specific amount of remuneration to partners. But when it went to the clause of 40B, there the remuneration figure was given as slightly different. We don't know how it has come into the picture. We had to go on verify that, and then we found out there were some errors which has happened crept in that area. So whenever a form details are given in Form 3CD, please ensure that it is being compared with the financial statements. Without comparing with the financial statements, don't conclude it at all. Same way in respect of related party disclosures in respect of corporates, AS 18 versus 40A 2B. That also will be coming into that particular slide subsequently. But in the meantime, I'm mentioning very, very clearly, we have to be very, very absolutely clear. Whenever some data is provided in Form 3CD, please ensure that it is comparable with what is given in the FS, because when it is compared and there is a discrepancy, we are in for a serious problem. Another important issue in respect of tax audit is dealing with large concerns and voluminous transactions. What happens is, as I was telling you in the initial stages, we are going to give a certificate by way of true and correct. But all said and done, true and correct means when there is a transaction of a petrol bunk which consists of lakhs and lakhs of transactions on a per day basis, and the turnover is also substantially huge. In those cases, you are not expected to verify each and every voucher in respect of those clients, which is not possible. Same way, there are some corporates or capital item suppliers wherein the invoices may be very, very less. The 10 invoices of each and particular party may run to an extent of hundreds of crores also. That item will not be having a significant impact. But the point is, what is the input which is going into the 10 units? 10 units they may be producing, and that cost, each unit may be around 10 crores. It comes to 100 crores of turnover. But for making each and every unit of 10 crores, there may be so much of purchases, so much of labor charges, so much of expenses which is going to be incurred, so much of material control which has to happen. So the point is, there is no link only in respect of the invoices and turnover which is going to determine the actual transaction. There is also an expenses details which has to be supposed to be verified. So in this scenario, we are bound to confirm that the sampling standard is properly followed up, and test check is also being done in accordance with the standard format. Because by verifying 20% of the transactions, we may be able to cover the 80% of the transactions value. By verifying the 20% of the volume, we may be able to cover the 80% of the transactions, provided the sample technique which is being verified is properly done. That is the sampling data which you are supposed to download. You have to ensure that it is properly and correctly and scientifically prepared. On that basis, you can do it. For that, definitely Excel sheet is going to be a very, very critical if you are not having any other major audit quality tools. All said and done, even the large firms are not able to have an audit tool effectively. So in those scenarios, Excel will be a fantastic tool. Do by way of sorting exercises and pick up the top few items. Probably you might be able to cover the item. At the same time, you should not miss out the item which is on the bottom. That also has to be verified, particularly in respect of cash transactions of 40A3. In those cases, you have to list out all the cash transactions. The smallest item also you have to go and verify, because the smallest item might be by way of a division of couple of items which you can verify only by way of a independent audit verification. So sampling and test check verification, how things are being done, we have to ensure that it is properly done, and only on that basis we'll have to do a complete audit. So on that basis of audit, we have an observation. There may be some situations we can have qualification, and many a time we may be having a disclaimer also. Just for an example of, once again, 40A3. 40A3 cash payments, we casually talk it as cash payments. But what the section says is, whether the payments in excess of 10,000 has been paid by way of a account pay cross check or by way of an approved financial electronic fund transfers. The point is, we might not be able to verify from the bank statements apparently whether any cash transactions has happened or not. So in these scenarios, there may be a requirement to go for a disclaimer also. Another example which I would like to mention in this particular area is purchases from the registered vendors and unregistered vendors. We may not be able to say in certain places, not in all the clients, certain clients we may not be able to have a concrete verification. In that situation, in the absence of necessary document, and we'll have to disclaim only. Same way in case of one more item which I would like to pick up an item is MSME payments. MSME payments, 43BH, etc. We might be under compulsion to give a disclaimer, because certain clients does not have a standardized practice of obtaining confirmation from members by way of whether they are an MSME classified or not. Because only despite MSME, that payment within that period, 45 days, will be coming to the pictures. So these are few common items which come to my mind for making a disclaimer. So where do you get qualifications? Qualifications can definitely come in any number of items by way of an audit which you do, where that you are not, that the accounting has not been done in accordance with the standards which is being prescribed. Maybe a construction standard AS7 or India AS9, I mean AS9 itself is not properly followed. There's a very possibility. What do you mean by these observations? Very importantly, there are certain situations you don't have a qualification, you don't have any reservation as far as this client is concerned, you don't have a disclaimer also, but still there may be some observations. One example I will tell you. Whenever you are going to give a report in respect of the tax audit or by online, it's always advisable to go for a physical document also, because only the physical document will be signed by the client. The guidance note of the Institute of Chartered Accountants of India makes it very, very clear. The Form 3CD is prepared by the client. Client has to sign the Form 3CD, then only we are supposed to sign. In this scenario, if everything is only in electronic mode, physical documentation is not prepared, it is not at all advisable to comply with the standards of the institute and also guidance note of the institute. So, better to take a physical copy and get the signature from the client also. Leave alone that, the same thing you may be under compulsion to observe in either Form 3C or 3CD, that this report shall be read along with the physical report which is being given, because when you upload it in the institute, it is going in the electronic form. So when it is going in the electronic form, unless there is every possibility that there might be some data which may be mixed or matched or whatever it is, in that scenario, what you are physically preparing by way of a physical documentation definitely is going to help you at a later point of time. That you may present in the observation in Form 3CD or 3CA or 3CB itself. This is an observation which I am only telling you a classic example of an observation. There might also be an observation stating that apart from the particular registration which Form 3CD, we are going to mention certain registrations. Apart from that, if you want to have any observations of that also you can mention it here in respect of observations. So qualifications, observations and disclaimers all are possible in case of tax audit, unless and otherwise. Same way, one more observation. There might be an individual whom we are doing the tax audit for their business. They may be having individual transactions phenomenally, and the individual transactions may be clubbed with the same proprietorship's bank account. In those scenarios, we have to give an observation that the audit is restricted only to in respect of the business transactions. There are other transactions which are being reflected in the respective passbooks. How it has been reflected in the books of accounts, you may be able to give in the observations, but that does not attract a qualification, neither a disclaimer. So I hope I am very clear on this particular item. Please understand, all these things three things are possible. Disclaimers are also possible, qualifications are also possible, observation is also possible. Observation is definitely possible in each and every transactions. Qualifications and disclaimers depending upon the respective client situations, and then you will have to do it accordingly. So we will slightly go a bit detailed in this manner. Appointment of auditor and independence. Once again, very, very important. The statutory auditors need not be a tax auditor. Tax auditor can be appointed from other fraternity also, not from the CA fraternity only, but need not be a statutory auditor. The same way, we have to talk about the independence also. The tax auditor has to be independent of the client. That independence, as far as the code of ethics is concerned, it is still continuing. Apart from that, we are also supposed to see, I am running a bit fast because all these things are going to be discussed in detail subsequently also in respective detailed slides. That's why I am giving you an overview only. Revenue recognition and accounting policies are very, very important. In particular, in respect of non-corporate assessees, accounting policies are not being disclosed anywhere at all. Because disclosure of accounting policy, which is AS1, is very, very important. In case of non-corporates, I am observing in very many cases that they are not all disclosing the accounting policy, because people presume that accounting policies are only in respect of corporate sector, which is not the case. Even in case of non-corporates, accounting policies are to be disclosed. Same way, revenue recognition, AS9 is very, very relevant for any business activity you do it. In the same manner, how this revenue is recognized in respect of each and every transaction of a particular party, maybe consisting of service activity also, maybe having a manufacturing activity, maybe having a trading activity also. In each and every segment, how this revenue is recognized, they have to give a very clear accounting policy. Otherwise, it's going to be a serious issue. Third important item, Third important item and critical issue as far as this tax audit is concerned is related party transaction. Related party transaction, which is dealt with in AS 18 as far as companies are concerned, it's also applicable in respect of partnerships also. what is referred in AS 18 by way of related party disclosure may not be the same in case of tax audit. In tax audit, we are having two classes which is referred. One is 40B, another is 48(2)B. All the related party transactions may not be referred in 48(2)B because 48(2)B is only in respect of payment and expenditure nature only. It may not be having certain transactions, which I will come on once again explain in the respective slide. But the point is, it is a critical issue. When I give a report under 48(2)B, you have to necessarily refer to that particular table by way of AS 18 for which you to examine and cross-verify whether you are appropriately and correctly reporting or not. Disallowances under 40A, 40 capital A and 43B. These are the three critical areas which has a significant impact on the taxation itself. Related party disclosure also has an impact on tax, but there only if the income tax officer is of an opinion that the payment which is being made in excess of what is the anticipated amount, there can be disallowance. But in case of 40 small a, 40 capital A and 43B, whenever a violation happens, there is an automatic disallowance which is going to happen. We have to ensure wherever TDS is not deducted under 40A, and as far as cash payments is concerned in respect of 40A and gratuity in case of 40A7, all these items are going to have 40A3, 40A3A, 40A7, 40A9, etc. and 43B by way of statutory payments, which is being allowed only on the basis of actual payment. So all these items are critical issues. Respective charter ones handling the respective classes would have done in detail. I'm just telling you there is a critical item which has to be cross-verified in a periodical manner that we have to mention with. Loans, advances and deposits. Obviously 216SS, 216T and 216ST also is applicable in respect of the transactions. Whether all these things are properly done or not, we have to report, including the receipt, payment, and what is the receipt and payment, etc. We'll be coming into that particular class once again. Cash transactions, I already told you, and PAN compliance, very, very important. Wherever the payments are being made in respect of non-PAN people, we'll have to ensure that the TDS is done at a higher value, that we have to report it in the respective columns also. GSTD and TDS compliance overlaps. See, what happens is in the earlier occasions, probably some senior chartered ones who are presently in this session might understand that this tax are in the earlier occasions, we had only one clause, whether the TDS under Chapter 17B has been appropriately followed or not. With that, it is over. Nowadays, what has happened is they are asking us tax deducted, not paid, tax not deducted, not paid, tax deducted but not paid. Apart from that, the quarterly returns, whether they have filed properly or not, that also we are supposed to mention. Same in respect of 43B in case of ESA, etc. What is the date of deduction and date of remittance, we have to follow it out. Particularly in respect of GST, which has been recently introduced. Now it is not recently, now it is 8 years over. Still it is in the nascent stage because still we are having a lot of complications and confusion which are happening in GST classes. But the last three clauses, which has been continuously deferred, and now it has become implemented in respect of tax audit report. It's a difficult task to report what is being asked in the class number 44, 42, 3, etc. in respect of GST. I am sure that many charters are also facing that challenge. We have to find a way out of ensuring that we do a justifiable disclosure in respect of those particular classes. Transfer pricing considerations, wherever it is applicable, in respect of international transactions which is there, that also we have to apply it and do it in an appropriate manner. Please ensure that is being done. Disputed cases and contingent liabilities, very, very important. In fact, in our office staff meeting also last week, we had the same discussions. Normally, what happens is this contingent liability in disputed cases, we take a representation from the management and we leave it like that. That is no more possible because the institute is also very, very clear and subsequent decisions are also very, very clear. Contingent liabilities, MRL is not sufficient unless and always do an independent verification. So we have to ensure whether there are any disputed cases which are happening. And in the case it is happening, what is the status of the respective disputed cases, we have to verify. Disputed cases can be by way of dispute between the supplier and vendor, or between the company and the vendor, company and the supplier, company and the staff, company and the versus the earlier staff, and a staff union discussion, and even in case of income tax dispute or GST dispute, all these things are possible. So what is critical about it? We are not able to conclude in such a manner that there are no disputes and we cannot give a report just like that. Particularly in respect of tax, income tax and GST, the portal access has to be obtained from the client. We have to go and verify the respective portals and examine whether any pending things are there or not. Without going through that, you cannot conclude only on the basis of the actual assessment on which I went. The 140, that is, for example, in the recent time, once the return is filed, once the e-verification is done, refund is immediately obtained. So we cannot presume that the audit is, the assessment is already over. It's only a temporary intimation which has happened. In this scenario, we have to go to the income tax portal and examine whether any 143(3) notice has been given at all. After that, whether any assessment has happened, whether any appeals are pending, all these things is available very much in the income tax portal. In fact, the senior chartered who have referred this various questions, one of those questions they have asked is whether the chartered accountant who is doing the tax audit is required to take a photo shot of the portals. Very much required. This is what an important item which I went to. Today I am doing an audit. At the time of completing the audit, I am seeing the screen portal and there is no tax audit disputes, etc. You have to take the screenshot today because there is every possibility day after tomorrow there might be a huge demand which may be slapped on the client. Same way in case of TDS compliances also, TTS portal is also available for you to see and TCS portal also. You can go and see the portal. Today there may not be any dispute. Day after tomorrow they can very well clamp an order saying that you have not filed the TDS return in the last year for a particular date. So per day 200 rupees, for 1 year it is 36,500 to 200 rupees, which is 77,000 rupees will be a penalty which is leviable. That may hope in the traces, it will be available in the traces. So important for us to understand that wherever you are having the access to the portal, go to the portal, examine that, download and give it. In case the assessee is not giving you to allowance to a portal, then you sit with along with them, they can see the portal, take a screenshot and keep it with you. That is also not possible. The only way is you have to have a disclaimer only, because I am not able to have an access to the portal, but the management has represented that there are no disputes which are available and you can leave it like that. If you have not attempted that, it will be a serious problem. That is why I am telling you, independent assessment has to happen. This is one side of it. Same thing is applicable in respect of GST portal also. In the GST portal also, Form 2B, Form 3B, Form 3A, Form 1A, all these things are sufficiently available and all these things are available in the portal. Same way, annual returns they are supposed to file by way of 9A and 9C, whatever it is, whether they have filed it appropriately, and if there are any disputes which are coming up there, that is all available in the portal. You have to see the portal and on that basis you have to report it. In case you are not able to see the portal, you will have to have the reporting accordingly in the respective places. For a moment, let us understand that everything is seen in the portal and everything is appropriate today. Take a screenshot and keep it with you. On that basis, you can very well say that nothing is pending. Okay, whether this portal seeing is sufficient may not be. Because when you see the financial transactions, you might be seeing there is an item called professional charges or legal expenses. You have to go to the professional charges and legal expenses, wherefrom you might be able to get an independent idea what are all the disputes which are happening in respect of the tax statutes or indirect tax statutes or any other statutes also. For example, PF, ESI, dispute between the vendor, and all these things will be applicable in respect of the legal expenses which has been, even for a arbitration. There is an arbitration which has created. At that point of time, you are appointing a chartered accountant, appointing an advocate to go and appear before the arbitrator. Once an arbitration happens, there is a potential case, there is a dispute which can happen, because arbitration is only a temporary phenomenon. After that, they are persons involved in arbitration can have an opportunity to go to a dispute subsequently, which go to a higher court. So dispute need not be closed with the information which is available with you. You have to go beyond that what is available in respect of the accounts. But in the accounts also, there are no information relevant by way of legal expenses, etc. or professional charges is not there. You can take the screenshot of that. We can, by way of proper documentation, we can ensure that we saw the portals, there is no issues. We saw the legal and professional expenses, there is no expenses which has been there. We also took the MRL, we are safe. Otherwise, we are not safe at all. Then we come to the contingent liabilities. Contingent liabilities can be by way of as many number of items as possible, can be your capital commitments, can be your legal cases, can be your cases with the staff, even a POXO case is liable for penalty, etc. Everything is possible in case of a contingent liability. Once again, we have to see this as what we call history of the client, and in case you are only doing the tax audit and audit is done by another chartered accountant, you can fairly rely on the other auditor, because you make it very clear that audit is done by so and so. I am doing only the tax audit. So in that situation, whatever happens by way of statutory audit, the respective audit is going to take the responsibility. And we are going to report only to the extent of Form 3CD. But at the same time, in Form 3CD, if you find at a certain area, which probably the auditor could have missed. I don't say that he should have missed it. He could have missed it. In that scenario, am I liable to report or not? This is one of the questions raised by the other senior chartered also. We have to report because once it come to your attention, once you are able to understand that it is possible to report, you have to necessarily report. I can give a benefit of doubt to the earlier auditor because what you are coming as a demand today, which is available in this, may not have been possible at the time of May 2025 when the auditor has signed the audited financial statements. Because even securing after the date of balance sheet, he can do only up to the date of signature. May not be after that. There might be a transaction which has happened subsequently, which you are supposed to take care of it and give a report also. Please understand, nothing is theoretical in this particular area. All our things, these things are practical. So disputed cases, we will have to be very, very careful. And contingent liabilities on that also you have to verify. But how do you overcome all these critical issues which has been mentioned from top to bottom, more 10 items? Only thing is documentation. The one and only insulation equipment which is available for chartered account is appropriate documentation. If you don't have an appropriate documentation, what best elements you are seeing also is not going to help you out. I'm telling you a classic example of a smallest piece of items which nobody would have definitely verified it. I'm just telling you a classic item. There was a firm where the tax audit was done by a chartered accountant. He has signed, everything is finalized, everything is being done, and MRL is given by the partner, and he has signed everything absolutely right. But in the partnership deed, it states very, very clearly the financial statements has to be signed by both the partners along with the auditor. In this scenario, he has signed only with the one partner. Whether that is right, the MRL itself is of no use. MRL which you have taken itself is no use because as per the partnership deed, it is being managed by two partners. In that scenario, you are taking a representation from one partner, it is of no use. If the partner is authorized by both the partners in one of the meeting to give all these things, then it is acceptable. Otherwise, I am talking about a classic case which will happen on a day-to-day basis in respect of partnership firm. Because in the partnership firm audits, you don't see anybody else at all. You see only one person who is a partner there. Even in many cases, we don't see the partner. We see with the senior accountant and we close everything. The partner finally comes and says, எவ்வளோ டாக்ஸுப்பா இவ்வளோவா கொஞ்சம் ரீஃபண்ட் வாங்காதா அதை மட்டும் கேட்டு they will complete it and close the matter. Beyond that, they don't even see. But the problem is, what about the other partner who is located somewhere else? Or the other partner who was not having an access at all. Subsequently, when an issue happens, that partner can raise an issue on you and you will be under definitely trapped. So this is the smallest item which is possible in respect of each and every small audit firm also. I am only addressing to the extent of what small audit firms face only. In those cases, we might not have charged much money also. 5,000, 10,000 rupees you might have charged for tax audit report. Please understand that tax audit has become a very, very risky affair. It is no more a non-risky affair. Don't charge any amount less than 10,000 rupees because even the smallest of the smallest client, 10,000 itself is very, very pittance. Because more than 2 crores only you are going to do a tax audit. Those cases, definitely they'll be able to pay. Because I see a lot of tax audits being done at smallest of the smallest amount, which is not advisable. Because we always say that whereas the money is very slow, very low, why I have to give it so much of documentation? We are only keeping it low. You charge it more, take documentation and just sit back and rest comfortably because this is an important area which has to be done. I stop at this level. If you have any queries, people can raise. The people who are on this administrative side, please examine whether any questions are there because I'm going to go into some case studies now. If there is nothing, I will proceed.
Yeah, please go ahead, sir.
Okay, thank you. Some two chats are there. Just check up any particular items are there. Only because two reasons. One is I am going at a particular speed, so I don't want to stop. I want to stop at this particular level. That's all. There are two chats which are available. And Asha Sharma. Request to team is yes, yeah, I'm at okay, nothing else. Okay. So I always tell to the group of people who are listening, so I will go to some situation analysis, case study sort of thing, so that it will be easily beneficial for people. A CF firm is disqualified under 141(3) of Companies Act 2013. Can it accept a tax audit? Because these are all practical areas where we always come to a situation. So whether the tax audit is coming under 44AB only, I'm not disqualified under Companies Act 2013, whether I can do it. Please understand, it is not acceptable, because once you are not qualified, disqualified means nothing by way of a professional disqualification. Even a person who has completed 5 years of a listed company audit, they have to do a retirement. Once they do retirement, they are not eligible for doing under Companies Act 2013. Once they are not eligible for Companies Act 2013, they are also not eligible for 44AB. So the answer is no. So we will not be, once you are not qualified under Companies Act 2013, you are also not eligible for tax audit also. Can an audit entity assign tax audit to its own internal auditor? Normally, in case of non-corporates, they generally have the person appointed as internal auditor. He himself will sign as tax audit report also. Because the internal audit is not under compulsion for them, but for understanding they are identifying him as internal auditor, he will sign the tax audit report also. Apparently speaking, there is no conflict like what is provided in section 141. There is no conflict in this particular case of internal auditor doing the assignment audit, but it is not advisable, because as per this institute's code of ethics, it has a self-review threat. Because you as an internal auditor, you have gone on through the verifications of this inventory controls, etc. You are already prejudiced. You are going to say that this is not right, this is not right. You would have given all these things, and you yourself do the tax audit report. Definitely there is an element of conflict of roles and conflict of independence happens. Self-review threat is there, so it is not advisable to do a tax audit when you are the internal auditor. Please, in case you are internal auditor and you are given a tax audit report, somebody is offering me coffee. With all your permission, I will keep having coffee simultaneously. So internal auditor, advisable not to go for tax audit report also, because role conflict will definitely be there. Tax consultant, there is no harm at all, because tax consultant is not going to do any review of your financial statements, even though there is a small element of independence effect which happens, because a tax consultant gives an opinion of a particular area is not eligible for disallowance, etc. He gives a tax audit report. There can be a conflict, but there is not as serious conflict as case of a internal auditor, so you can definitely go for that. See, these case studies I have discussed with some couple of chartered accountants. I asked them what are the issues which can happen. They raised it, and I'm just putting it to the question and answers. So in case any of you have a questions, you can either put in the chat box subsequently, we can respond to it, or you can send it subsequently to me by way of a mail ID, my mail, and then also I will respond. How to count joint audits and branch audits? Very, very important question. Whenever, for example, in case of PSUs, etc., it will be joint auditors. In case of banks also, there will be joint auditors. Whether it will be considered as how it will be counted. So as far as joint audit is concerned, it is considered as one more number. For example, I am the auditor for State Bank of India. I am doing the tax audit. That will be considered as one audit. Each and every firm which is doing the joint audit, each and every one will have one audit, because that cannot be avoided. Just because it is joint audit done by somebody else, one person only will be the audit. It's not the case. Each one person will be avoided as one audit. Branch audit is head office and branch. When it is a branch audit, head office is and branch is there. Both are same SSE. It will be one audit. It will not be two audits. That is, there might be a branch of an organization, company, and there's head office. It is considered as one audit only. In case of bank branches, there are still some banks which are giving tax audit to the respective branches itself. There are certain banks which have observed totally and given it to centralized. But wherever it is done, each and every auditor is going to do one audit. At the head office level, they are going to do the consolidation. They will be doing one audit only. They will not be doing multiple branches. This is important. Those central auditors also may be covering few branches, but they are going to assemble it together. It will be considered as a one tax audit assignment only. Then we'll go to the appointment of tax auditor. Continue. Company SSE eligible for appointment on 141(3). Once it is there, you have to necessarily see the compliance of provisions of 139 and 140 also. Others, there is no specific provision regarding the appointment and quality of qualification of auditors, etc., except that he has to be a chartered accountant. Please ensure whether the independent threat is being compromised or not. If the independent threat is not compromised, you can definitely take up the audit. There's no problem. Whether the code of ethics will be applicable in respect of tax audit, yes, it is applicable, very much applicable, because any assurance practice which you are supposed to do, the code of ethics will definitely be applicable. Not only assurance, even other misconduct also can happen in respect of ethical standards. So we have to be very, very sure that Institute code of ethics is applicable in respect of tax audits also. So these are the appointment issues. Then we have to see what are the challenges which are there in case of acceptance of this audit. So what is the challenges? You have to decide whether you are independent and there is any conflict, etc. This goes to the original calculations by way of code of ethics, etc. Whether a person who is regularly dealing with a particular client can do the tax audit also. What is the dealing, commercial dealing which you are doing is very, very important, and you have to assess yourself. You have to evaluate yourself whether this conflict is there or not. If there's no conflict, you can go there. Same way, relatives. If your uncle is having a partnership firm and you are supposed to do the audit, how much of effect is going to happen? Definitely it will have an effect. In 141, you are disqualified. You cannot do it in case of Companies Act. In case of non-corporate, whether it can be done, it should not be done. Ideally, it should not be done. So please keep yourself away wherever conflict is happening. Don't take up the independence conflict. Don't do that at all. Same way, your son is a CEO of an organization, whether you can do the tax audit? No, you are not supposed to do. Your son, daughter is a CFO in another organization, you can do? Not supposed to do. So once there is an independence or conflict is being there, please don't do that. It's avoidable. Ethical compliance. So ethics compliance is once again linked to independence and conflict of interest. So wherever ethical compliance are in danger, please don't take up the audit at all. Limits under 44AB, already we have discussed about that. That number of audits which is being restricted, we have to strictly adhere to that. Nowadays, UDIN is there. At least earlier, this UDIN situation was not there. Now, by press of a button, a particular branch, particular member, how much tax audit report he has signed is available with the institute. Once it goes beyond that limit, definitely there can be an issue which can strangle you without much of an action. Assessing quality and readiness of clients' books of. It's a very, very, very big $1 million question, because all of us know, in this year itself, straight away, all of us know, only after the extension is done after 30th of September, very many people have started preparing the books of accounts itself. I'm talking about non-corporates, because corporates, fortunately, this, what is that? This is available, edit module, this thing is available. So they cannot keep on doing that. Their advantage is there. But in case of non-corporates, they have started preparing the accounts. In fact, a couple of months back, one client came and said that tax audit report is not ready, sir, non-corporates, because he said that last year finalized financial statements which has been given to your office is lost in our office. I want a copy, then only I can start doing that. Which means they are starting working only now only. All these things are possible. So if the readiness of the client is not there, there is no point in doing an audit. More danger is if the readiness is not done today, quality is definitely going to have a 6, because quality will not be there, because the entire year's accounts is being done in few days time. Definitely the quality is going to compromise. When you do the verification of the accounts, you may not be having a proper narration. Narration is going to help you in examining whether the expenditure is within the parameters or not. All these things are going to have a quality. This is a very big challenge which you are supposed to overcome. Interplay between TDS, GST, AS, and also Companies Act 2013. Interplay between these items are definitely very, very relevant, because when TDS is supposed to be done in the Income Tax Act, that is also going to have an allowance in the case of income tax. That examine and what are the payments which have been made according to the accounting standards, auditing standards. All these things have to be interplayed. Tax audit is no more a small joke by way of filling up 44 clauses, which is not the case. We are bound to be very, very clear. So in these challenges, we have to follow it up, definitely ensure that there is a huge professional risk and liability. So what is the professional risk and liability in respect of each and every case? We have to examine, and then only we'll have to take up the audit. As far as this appointment is concerned, we have to be very, very careful whether we are coming within these parameters. Once we are coming within the parameters, we can definitely take up that audit. So once you are appointed as auditor, This was discussed by Mr. Shankar also in the first day, what are the documents we obtained. But I'll just quickly go through that. These are the items which are supposed to be verified. I will be circulating this presentation to all of you. You can go through that. But please ensure that without all these things, don't go for an audit. Engagement letter is very, very important in respect of tax audit. Maybe you need not have an engagement letter which has been given by the Institute of Chartered Accountants of India, which is a very, very lengthy items. So in case of small partnership firm, just have a formal engagement letter to saying that we are providing the books of accounts to you with all this information. Please complete the audit and give it by way of this date at the rate of so and so. And in that they can give the list of group and related entities. That with that at least you have to definitely start with the work. And in case of corporates, definitely board resolution is required, because there are cases which have happened, particularly in respect of NAFRA itself. I'm not talking about tax audit and NAFRA is related, but I'm telling you in NAFRA, in case of branches, they have not got the appointment done at the AGM level. They were all taken to task. Very, very serious affair. So each and every branch, each and every institute, each and every audit has to be followed by a way of a proper engagement letter. Without engagement letter, don't do that. And declarations, etc. And from your office also, you have to necessarily have that none of the partners are interested in the respective clients, for which it's better to have an annual declaration by each and every partner, whether they are interested in any of the business, etc. And last item, which is very, very important, last but not the least, what we say, previous auditors communication is very, very important. In case of tax audit, previous auditor communication is very important. One critical point which I would like to mention here, very, very important, people miss it out. March 2025, they are coming for tax audit to you. March 24, there was no tax audit because it is less than the turnover. March 23, it was no tax audit because they have opted for some other sections or whatever it is. March 22, they were coming under tax auditor. Whether you have to go for a no objection. If the client has never been tax audited at all, this is the first year of tax audit, no problem. But if they were subject to tax auditor earlier in the last year or the year before, in that situation, you become a new auditor only. Necessarily, compulsorily, you have to take an objection from the previous auditor. They are not saying that previous auditors means not the year of the audit of the previous year. They are saying previous tax auditor. In that situation, you have to ask for a previous auditor's no objection only. It's not no objection, basically a communication. In fact, we had an opportunity to audit a derivative client. He was not covered under tax audit in the last year. Year before, he was asked. Unfortunately, he is coming and saying, even though he is talking ill of the other professional, he says there is no books of accounts which is being maintained by me, sir. It's only broker's notes on which the basis of which accounts are being verified. Sir, this is how I have been doing all the years, sir. Why you are asking for books of accounts? I asked them, where are the books of accounts in respect of the derivative transaction? He said, there is no books of accounts. It's only broker's notes which are available. Broker's notes is not sufficient books of accounts as per section 44A or 44B as the case may be. You have to have a proper books of accounts wherein the broker's transactions are recorded in their books. On the basis of that, we can do the audit. For this purpose, I asked them, what was the books of accounts that verified in the previous year? Show me the form 3CD, 3CA. He said there was no audit in the previous year. Okay, show me the year of 2023. Then he said the 23 is available, sir, but so and so has signed, sir, but he did not ask for books of accounts at all, sir. I did not want to believe that. I told him, sir, it is not possible. In fact, we were asking about KYC also as far as this party is concerned. The KYC is also not coming. So once KYC is not there itself, I will not be able to take up the audit, sir. Apart from KYC, you are not giving these books of accounts. It is not possible to do us. You are already on 24th of September. Even though extension comes, I will not be able to do anything at all. You have a books of accounts, you come to me. Otherwise, it is not possible to do the audit. Same way, when it was 2 years before, I have to ask for a previous auditor communication. Then he said that it is not possible, sir. Then I will leave it like that. So I suggest to all the auditors here, please be sure that it is not only the previous year, that is March 24 audit alone is not relevant. Even if it's covered by previous auditor, you have to necessarily go for no objection or a communication which has to be done as far as the institute is concerned. Then let us talk about something on turnover. Definitely these sections might have been discussed by the respective persons, but nevertheless, it is ideal to look at it. One has to see 3 businesses, one retail, one transport, presumptive, and commission should be aggregate to test the threshold. This is an important question which is specifically answered in ICAI guidance note itself. Aggregate turnover of all businesses under the same bench must be considered. All turnover. In fact, the charter one, senior charter one who has assembled the questions also, he raised the same point. when you have different businesses, the turnover under the same PAN number, even if it is located in with different geographical locations, if it is acted under one PAN, all those items have to be merged. But there is an exception. What is the exception? Business covered under 44B, 44BBA, 44AD, etc. And the assessee has opted out this assessee in respect of sections by presumptive taxation, that turnover alone can be excluded, provided the separate books of accounts are being maintained. If the separate books of accounts are maintained, you can remove that. Otherwise, the entire turnover has to be clubbed to see whether tax audit is compulsory or not. I'm sure I'm clear about this. If anybody has a query, you can note down, you can respond to it subsequently after a couple of slides are being completed. Wrong aggregation decision can definitely lead to a wrong non-filing penalty, because if you don't aggregate, you presume that it is not to be aggregated. Each and every item is a separate business. No, under one PAN, one business only. You have to necessarily add it accordingly. Of course, another exception is there. That is, you have properties in property income which is there, which is being disclosed under house property. A proprietor is having house property income. That need not be clubbed. Only business turnover has to be clubbed. Another thing, it cannot be clubbed. This is an important issue which cannot be overruled at all. Next is one more turnover aggregations in respect of challenges. What are all the challenges which are going to happen in respect of other turnover issue? Multiple GSTs, because obviously you are having a location at multi-states, definitely you will be having multiple GSTs. So in that situation, aggregation is going to be a challenge, but you don't have an option. You have to do the aggregation, and without that, it will not be able to be completed. Leave alone GSTs. Another issue is also going to be there by way of different accounting systems. One place you are having Tally, one place you are having an ERP, one place you are having. So in that scenario, turnover itself will be different in respect of each and every transaction, because the method of accounting is also going to be different. This is a very, very important. Whether you are eligible for 44AD, 44ADA, or 44AE, 44, all these sections, each and every item is a fact or contract driven. For example, if you are going to do a transport contractor, so you are eligible for 44AD in respect of particular item, you can do that, and subsequently. If it's a retail trade, whether I am eligible for that. All these things, you have to examine each and every item, examine independently. Once it is eligible for that, whether it is legitimate to claim that, then you remove that exemption. This is a very big challenge. But what happens is, this sort of scenario is very, very rare. It is not that every property is going to happen like this. Once a person is having multiple activity, invariably they would have expanded, or they would have put different proprietorship in the respective places. Husband is a proprietor here, wife is a proprietor, like that, it will be there. Very, very rare cases, a same proprietor is having multiple businesses activities. But at the same time, we cannot rule it out also. We have to examine that is being done. Isolating turnover of the business where the books are consolidated. So you have to do a consolidated audit also. That is, you cannot do independently. You have to audit, and then you have to do the consolidated audit. At that point of time, it's very, very difficult. Isolating the turnover is an important issue. I'm telling about challenges only. So how do you overcome that? Apart from the regular documentation, you have to see other documentation also. Example, evidence trail for exclusion. Why you are excluding this? You have to take an evidence. On that basis, you will have to do it. Business-wise turnover schedule, reconcile with the books, bank, and GST. Very, very important. GST, fortunately, it is a very big boon for auditors. Even if though the client says that there is no turnover at all, if you go to the GST portal, you are able to easily identify that. Same way, AIS is also a very big boon for us. Many clients come and say, sir, that I did not do any short trading transactions at all, sir. Take a printout of AIS and show, sir, in the AIS it is being disclosed. You don't have an option. So long they have been escaping by without. Once they give a PAN number, everything is being traced in the AIS. Same way, in case of GST also, it is available in the portal. Please ensure that it is being properly verified and done. Have a legal and technical note explaining the classification, whether it is transport contractor, whether it is that contractor, it is a trading activity, all these things, you have to do that. And have a proper working paper. Please understand, my dear friends, documentation is the only thing which is going to help you out. Otherwise, definitely it is not possible to help you at all. You will not be able to respond to you in a proper manner unless the aggregation is done properly. In the turnover aggregation, I'm just taking a couple of case studies for us to easily identify that. The SSC has income under 4480 previous year, but this year has a turnover of 1.8 crores, but declared a profit of 4% only. Should the audit be done? Obviously, the section is very, very clear. I'm making it answer as well as mentioned here. If a person opts out of 4480 before 5 years, they cannot re-enter for the next 5 years and must get books audited if income. It's very, very clear that section itself is very, very clear. Please ensure that once that profit is being reduced, you don't have an option. You have to do a audit in appropriate manner. So my point is the practical insight we'll have to see it. What happens is clients initially they don't even understand whether they have gone for 44 ED or not because they are migrating from client to client. I'm talking about small time business people only. Long time corporate business, no problem. You are appointed for 5 years, you will be having that coverage, etc. But non-corporates keep on hopping between the auditor to auditor. In that situation, you as a new auditor, please ensure that you ask for the previous audit, previous reporting, previous portal, examine that, and then you please see whether it was they have claimed under 4480 or they have done under regular audit of 3CA 3CD they have obtained or not. Portal is very much available to you. On that basis, you please ensure that future audit complications are not covered by you. Once again, this further explanation on this particular area. If the SSC claims 4480 in 1 year, declares lower profit in the next subsequent year, the benefit will not be allowed for 5 years subsequent year in which lower profit is declared. So please ensure that also will have to update the person saying that this is way it has to be done. Please ensure the documentation. See, again and again, I keep repeating 2 items. One is documentation and this is management representation letter. Even though management representation is not going to absolve you fully, but definitely it is going to help you in ensuring that reasonable protection happens, provided the independence examination you are eligible to, you are entitled for documentation, you are able to prove that you have done an independent audit also, apart from relying on the management representation. Because, but for this, you might not be able to ascertain in any manner. That is, go to the respective previous year portal where they have shown us 44 ADR, 44 ABR, 44 ADA, etc. Please download that and then do it accordingly. This happens in case of almost all the land developers. A developer entered into a single contract for land and construction. For turnover threshold, section 44AB, do we have to consider the gross agreement value or only construction component? This question happens in case of all small time developers. So in this situation, once again, institute guidance note. Leave alone the institute guidance note. Logically also, you have to be very, very clear. What is to be ascertained as business turnover, you have to determine. So in this situation, land is guidance note is also clarifying this. If the land is kept as stock in trade, if the land in your financial statement is kept as stock in trade, the entire value will be the business, because obviously stock in trade will be converted and being sold. So you develop the building and that and sell it as a flat. In that situation, the entire turnover. But if the land is considered as a fixed asset, there you will be showing this capital gains taxation and the building alone will be considered as a turnover. I'm sure that all of you will agree with this and also clear about this. Guidance note is also clarifying that very, very clearly, because this question has happened in multiple cases in case of small business activities where they are developers. That is why we always say that keep the land separately in respect of proprietorship. Once again, in case of a partnership firm, a private limited company, all these things may not happen, because when they bring it to the asset by way of development activity, they will add it as project only. But in case of proprietorship, they would have bought the property long back and kept it as idle, and subsequently they might be going for a development. In those scenarios, this will happen. So if the land is kept as stock in trade, the entire volume is the turnover. If the land is kept as a fixed asset held separately, then as an investment property, then only the construction portion will be the turnover. Where will be an issue? This will be a critical issue in case of JDA cases. Whenever joint development agreement is being signed with the developers, with the property or the property developers, you enter into an agreement. So in that situation, there can be an issue by way of land and construction, which is highly judgmental. You may not be able to determine exactly what is the land and what is the construction cost. It's judgmental. Once again, documentation is going to help you out in finding out whether it is turnover or not. Derivative. These derivative issues are becoming very, very big nowadays, because obviously it's a very, very attractive concept. People have gone for derivatives left, right, and center. So whenever derivative contracts is happening, what are the items that will be done? The aggregate of both positive and negative differences is to be considered as a turnover. Both positive and negative differences. There are also possibilities. This what you call the broker is not giving a proper transaction details, etc. They are only giving the total transactions. This is a critical issue. Definitely, it's a critical issue. In fact, this was also raised by the other auditor. Only thing is, how you can do is, you can ask for the information from the broker in an appropriate manner, and on that basis, you have to only do the turnover. Otherwise, it is not possible at all. You have to overcome that. But what happens is, contract value is taken away straight away. But the problem is, it will be a huge turnover. That is, the total actual turnover which is liable for taxation will be only few lakhs. But when you take it as a gross figure, the entire amount is a highly overstated figure. It's going to attract the eyes of the people. Please ensure that, give the client necessary input, say that, get the positive and negative differences from the customer, and then we'll have to do it accordingly. This is one more critical issue which I wanted to express to all of you. Mixed receipts, commission, sale, reimbursement. There might be multiple items of your revenue. Each and every client have their own methodology of accounting that. Commission is one item, sale is one more item, and reimbursement of expenses actually reimbursed is a different item. If they have a methodology of accounting of reimbursement as a part of the turnover, in that situation that will also be turnover. That is, they raise an invoice and collect the money. Instead of raising an invoice and collect the money, their actual expenses being reimbursed, that may not be considered as a turnover at all. How do they account? For example, take the case of clearing and forwarding agents. In the case of clearing and forwarding agents, there might be a situation they actually pay the harbors certain payments which they collect it actually. In those situations, when it's an actual reimbursement, it may not be considered as a turnover at all. It is kept as a client suspense and closed. That is depending upon the method of accounting that particular C&F agent follows. There may be a situation where the same C&F agent follows that raise an invoice with a margin or without a margin also. But I raise an invoice only. Once you raise an invoice, it might be eligible for exemption under GST because it is coming under no charge mechanism, because everything is being actual reimbursement which is happening, POS. So in that situation, they may not be liable for GST. But at the same time, it will be considered as a turnover because your accounting policy is in such a manner that you have the turnover plus the expenses, both you raise as a part of the invoices, and then the gross bill value will be the similar thing what is applicable in respect of 194J. In case this question happens in very many places, as a professional, what is gross billing? If you include the expenses in the bill also and take the total gross bill, it is gross bill only. So this scenario, but of course excluding the GST component. In this scenario, please understand, wherever there are mixed receipts, please ensure that appropriate accounting is being properly done. And if the clients have a recording of mixed entries, you have to necessarily take extra effort to identify what is being examined and what is being repeatedly circulated. So we have to see correct tax treatment, GST income classification, that we have to examine. Then only we may be able to do an appropriate audit. Next item, which I thought of risky and important item, is related party transactions challenges. Identification of related party transactions is definitely always there. It is going to be disclosed only by the management. We may not be able to go beyond a level. But in case of corporates, probably you can pick up the directors and you can examine their declarations to the MCA. On that basis, you may be able to get those information, whether they are interested in any of the companies, etc. But at the same time, multiple entities under common control of family groups is also possible. That is a challenging area. Partners holding indirect interest. That is, the partner may be a partner in another firm and that firm may be having another interest in respect of the other parties, whether it is going to be a related party or not. So we should be able to understand what is applicable for AS 18 may not be relevant applicable to 48(2)B. But what is applicable in respect of 48(2)B may not be, or 100% may not be applicable in respect of AS 18 also, because the definitions are different between AS 18 and 48(2)B. Let us talk about 48(2)B alone now. In this scenario, we are going to say whether the party who is going to be identified as attractor under 48(2)B, which is provided in the section listing out certain number of relatives, etc., whether those people are coming under this. In that situation, please ensure that these are being included in the AS 18 also, or compare the same figures with the AS 18 which has been given in respect of corporates. I am talking about corporates alone. In case of non-corporates, may not be having a relevance. They may not have given us detailed notes, etc. You are only going to verify an audit report there also. But at the same time, apart from the management representation or management information which is being given, please ensure that partners and the relatives will please ask for the information, reconciliation with the financial statements, MGT filings and 3CB report if applicable. Wherever transfer pricing report is being done, so you can ask for the transfer reporting copy. But invariably you can say that, sir, tax audit precedes transfer pricing, sir. But transfer pricing documentation would have been done in those cases. Ask for the transfer pricing documentation, in which they would have given a list of parties which are related parties. Particularly in respect of international conglomerates, they have an annual consolidation also. You can see the previous annual consolidation. For example, December consolidation would have happened. In that, you can pick up the items. Whether those items are shown in the related party transactions or not, you can examine. So we are bound to have a reconciliation between FS, notes in accounts, MGT filings of the respective partners, respective directors, and also 3CB wherever it is applicable. If it is not applicable, you don't have to bother about that. As I told you, AS 18 and 48(2)B are slightly different, but the core criteria is like this. 48(2)B is rule-based, substantial interest, relatives, ownership links. This is given in 48(2)B. As the AS 18 is concerned, substance over form, control, KMP, relative significant influence over the party, etc. This is very, very important. You have to understand this. Then only when we discuss about those items, you may be able to come to a clear picture. So all items of AS 18 may not be applicable in respect of 48(2)B. One classic example I will tell you. In case of between holding and subsidiary company, what will be the transactions which is happening between holding and subsidiary company may be reported in AS 18. But in respect of 48(2)B, it might be required if it is a non-revenue nature. That is, it's not an expenditure in nature, it may not be expenditure income revenue nature, you may not be disclosed at all. This is one classic example I am telling you. Probably I will come with a detailed example subsequently. Relative in the IT Act is wider. It includes all lineal and ascendant and descendant. Both sides it has to be included. Whereas in case of AS 18, it is not like that. Director, his relative is a director, his spouse is a director. With that, it is over. After that, it doesn't go beyond that level. If the director is a common director in both the companies, they are coming under AS 18. But other things, lineal ascendant and descendant, are not coming in 48(2)B. Larger groups and concerns with multiple branches have hundreds of interentity. Please understand, interentity transactions are going to be there without no automation or RPT flagging. So in those cases, we have to be very, very clear how we are going to protect our skills. Many RPTs, example, relatives, consultancy fees, etc., have no formal agreement at all. Only if there is an agreement, you may be able to understand that. But no formal agreement happens in respect of non-corporate situations, basically. Unlisted companies, it's all within two partner directors or two director firms or two shareholder firms. In those cases, they may not be having a formal agreement approach. It's a challenge. You have to examine. Once you verify these rentals, etc., please ask for that. Who is the person? How is the person related? Whether any related party is there? Ask for specific representation in each and every items. Over reliance on claim decline without verification is very, very serious. This is what I am again and again telling. MRL is not going to protect you 100%. It's only it doesn't insulate you. It protects you, but it doesn't insulate you. There's a difference between protection and insulation. Insulation means you are totally covered. You will not be affected by anybody else. You will be a Sita Pragyan. Nothing will affect you. Whereas in case of protection, it can protect you as long as your wall is sufficiently thick. If your wall is docile, it will definitely have an effect on that. Please apply professional skepticism to ensure whether the documentation is sufficiently proven or not. Documentation burden is on you. It is for both peer review and also QRP. Both are relevant. We'll have to examine that. Just few questions. Whether the following has to be reported in class 23. Class 23 is related to related party transaction 48(2)B. Few questions for your thought processes. One is dividend paid to the holding company. Since it is not an interactive situation, I am explaining to you here itself. Otherwise, I would have asked the question, I would have waited for the answer. Dividend paid to holding company is not going to have a relevance at all because it is not having an expenditure of 48(2)B disallowable. Why 48(2)B is there? 48(2)B starts with an item of payment or expenditure. But the clause says very clearly what is the purpose of it. It is for the income tax officer to ascertain whether the transaction is genuinely sufficient enough, whether it is reasonable for allowing it as an expenditure. That is, more than that, more than the reasonability, he will disallow. That is the intention of 48(2)B. In case of a dividend, it is never an expenditure. It is not even debited to the P&L account nowadays. It is directly reduced from the reserves and surplus in the balance sheet items. So in this scenario, it will not be attracting any disclosure under 23. Investments in shares, equity, subsidiary. As I already told you, under AS 18, this will come. Dividend also will come in AS 18, but 42B it will not come because it's basically a capital item, capital in nature, nowhere it is being claimed expenditure or whatever it is. Purchase of fixed assets and capital expenditure, it might attract because it does not say revenue expenditure, it say expenditure. So in case of capital expenditure, you will be under compulsion to report it. Please ensure that report it there. Reasonably unreasonable, subsequently you will have a discussion and decision whatever it is. Advance paid for purchases of material or PPE or receipt of service, whether this will attract. Normally, we tend to come to a belief that it is not being debited to P&L account or credited to P&L account. I am only given advance payment. Only in the next year it will be coming in the way of an necessary expenditure. No, they are saying amount paid towards an expenditure. In that situation, you are supposed to report this also, but may not be having an impact because being an advance paid, it will have an effect in the next year. That ITO may raise a question whether any eligibility or disallowance is possible. We will have to mention that it is in respect of an expenditure during the time of assessment. It is at the time of assessment he has to worry. But as far as auditor is concerned, we have to worry and give a report here itself. See, let us first insulate ourselves. Let us protect ourselves. Then we can talk about protecting the client. Because I was talking to some other person also in the same manner. One of the clauses in your 3CD says expenditure by way of entertainment, business promotion, etc. See, what happens is that is for the purpose of, subscription to clubs. This is by way of an information only. Subscription is eligible for expenses. Other items may not be eligible for expenses. It will be allowed, disallowable. But what happens is once you report this, the assessing officer disallows it. For that purpose, can I take a risk? I am not supposed to take a risk. I will give a report. Subsequently, during the assessment, we will have to protect that client and give them an appropriate reply. Not only this corporates, not only the business people, even in case of trust, I will tell you a classic example. What has happened is why I am deviating is I want you to understand the importance of reporting. In a particular trust, there was a capital expenditure which has been incurred. The auditor has mentioned in the main 10B report stating that the assessee has incurred capital expenditure which has not been treated as application in view of the amount being spent out of loans obtained. But what has happened is the assessing officer has erroneously reduced the amount which has been considered as capital expenditure because he has given the quantum of 2 crores. Out of total expenditure which has been claimed as 9 crores, this 2 crores has been reduced because capital expenditure you are not claimed, you are taken out of loans, so I disallowed it. This auditor has given by way of a protection to him, which is right only. At the time of hearing, we have to explain and come out of it. Why I am telling this is, we are not here to protect the client. First, we have to protect ourselves, and then, if possible, you go and try to protect the client. This is the practical side of it. I am always in favor of ensuring that the clients are protected. At the same time, you have to be protecting yourself in an appropriate manner. This is relating to related party transactions. We'll go to 43B. Challenges are very, very high in respect of the 43B. Clients often mixing post harvest efforts in the same ledger. See, in the same ledger, they do debit and credit, they will be confusing. It's all going to be a serious problem. It's a challenge. We have to analyze it and appropriately verify that this definitely the concerned auditor, concerned chartered also would have explained to you. For large organization, aggregating multiple challans for multiple units is also going to be a serious challenges because in case of statutory payments, challans are being dissipated in various places. It's a challenge. But when it is a large organization, they will definitely have a mechanism to have a control of that. Overall, the total figures will be completely verifiable. You have to verify that. Payments are routed through outstanding liability GLs and also expenses GLs. Both items they will be combining. That's a serious issue. It's a challenge. We have to examine, analyze, and do that. It requires a mammoth reconciliation which has to happen, particularly in respect of large organizations. Reversal journal entries posted in liability ledger. It's a very big challenge because reversal journal entries are happening. They are, instead of going to the respective expenditure, they go to the liability ledger, and from there they take it to the example. I'm just telling you a classic example. They have provided for bonus. Bonus account, bonus payable. The entry has been passed. The reversal journal entry is getting debited to bonus payable instead of adjusting this bonus account or whatever it is. In that scenario, we will be under compulsion to examine how it has to be reported because bonus is allowable only on payment basis. If it is not paid, it will not be allowed as a deduction under 43B. Same way in case of statutory dues also. Instead of debiting to GST payable account, if they have taken to the rates and taxes, I am telling you a classic example. interchanging or mingling of respective heads is going to be a serious challenge. We have to keep our eyes and ears open to ensure that the portals are being verified appropriately and then go and verify it. This is a very, very important item. There is one entity in a group which takes care of expenses of all the subsidiaries. In that situation, we have to ensure when you do the audit of subsidiaries, you have to ask for the information from the holding company, whether those items have been reflected in their intercompany reconciliation account. On that basis, you have to give a report, verify that and give it. Prepayments and amount paid under protest. Very, very important. Whenever you are going for a dispute, you pay under protest. You cannot claim it as an expenditure because you yourself has paid under protest only. You are not going to claim it as an expenditure. But at the same time, where you have to report it appropriately in the respective column. Provision created for disputed dues. Whenever you are creating a provision, it may not be eligible for deduction. You don't have to bother at all. Lender. It's a very, very classic case. Lender has waived 2 crores of interest on loan, which was originally taken for capital purposes, not claimed as a deduction. Should you report it here? It's a very, very important question. For example, I'm explaining the case once again. There's a loan given of 10 crores for which 2 crores of interest has been provided. I have debited to the work in progress or by way of capitalization, borrowing cost. I have added the borrowing cost to the capitalization of the item. Whether I have to report it, it has been now waived. Whether it has to be reported, I don't think it has to be reported because anyway it is going to be reversed back. Once it is waived from the other side, I am also going to reverse the expenditure, and either way it has not been claimed as an expenditure at all in the earlier occasions. I don't have to bother about that at all, and I don't have to report also. Only thing is you have to examine whether it has been capitalized. You have to examine whether subsequently it has been reversed. You have to examine it has not been claimed as an expenditure. In that situation, you don't have to report at all and leave it like that. I am very sorry. I am not able to understand whether you understood what I am saying or not. We are in a virtual mode. We are not able to say beyond a level. But whatever best possible, I am expressing to you. In case you have any questions, subsequently you can respond to me or mail or in interaction also. Clause 22, which is on MSME. Very big challenge. 43BH. Implementation guide is there. But whatever be the guide which is being created, I am very clear as a chartered accountant, I am not able to apply my mind at all in an appropriate manner in this case. Because it is not at all possible. Verifying MSME status is not possible because the client is not getting the information or the person is giving the information is not giving the information. Both way it is possible. How do you say that it is not MSME? Is it possible for us to go and keep on putting in the MSME portal and examine each and every SSE whether it is MSME or not? Not possible. For that situation, what we'll have to do is definitely, I'm going to the last item immediately. Uncleared payments as on 31st of March. Please pick up those items of uncleared entries of 31st of March. On that basis, at least those items you go and cross-verify because that is only liable for 43BH. Otherwise, there is no problem at all. During the year, if it has been paid, whatever has been raised by the party, if it has been paid within the financials, you don't have to bother at all. 43BH is applicable only in respect of transactions which are paid after 45 days. In that scenario, you have to understand a bill has been raised in the month of January. It has been paid only in the month of April, which is beyond 45 days. Is it disallowable or allowable? It is disallowable only. So in this scenario, you have to definitely report. It will be allowed only in the year of payment. There is a different thought process which is happening because from 31st of March only I will take 45 days, which is not the case. From the date of bill, 45 days has to be examined. So as on 31st of March, what is there? You please look at the uncleared payments. That at least you please verify it in detail to ensure that MSME status is taken care of. I was talking to you a couple of slides before. What are all the observations, qualifications and disclaimers? There, this disclaimer will definitely come to your help and observation also can happen. As far as 43BH is concerned in respect of MSME payments, during the year there are lots of delays which are happening. Anyway, it is not going to be covered for 43BH. But at the same time, interest payable in respect of MSME payments can trigger, but the management is of the information that they don't pay at all interest. And they are also not claiming. Honestly telling, my dear friends, no MSME person is in a position to demand for the interest payment from the supplier or vendor as the case may be, because at least some sales is happening. For 45 days to 15 days, you give me an interest, next order will not come. So they are not inclined to have interest claim also. But as far as we are concerned, there is a statutory responsibility for providing the interest. In respect of the MSME cases, we make it very, very clear. No interest, the management is clear that no interest is paid. The amount is also not quantifiable. You can leave it like that. But 43BH is a serious issue, for which matter, please ensure that unclear payments as on 31st of March has to be taken up. Examine that, analyze that, and verify that. On that basis, you can do it. If there is Udayam certificate from all the clients, examine, particularly in respect of ERP environment or SAP environment, this is slightly lesser risk, because when they create the vendor account itself or customer account itself, they are able to identify very, very clearly whether it is MSME or not. When that is in case of ERP or a SAP environment. Problem happens only in respect of non-ERP and non-SAP environment, where this tally is there. People will come and say, sir, is ERP tally, sir. ERP tally is nothing but a normal tally only. They only call it by way of an ERP, but it is not an enterprise reserve planning. It is not possible. It is not giving the necessary information which is required for the purpose of ascertaining whether MSME issues are there or not. So again, to repeat and make it very sound and clear, as far as MSME items are concerned, whatever information gives by the client is not going to be there. Last is very, very important. Disinterest by the SSC for accounting interest. They are not interested. No client is interested in providing for the interest because they are not going to pay. They are not going to pay. They also know the client, that is, supplier is also not going to ask. So in this scenario, you only have to mention that it is immaterial. It may be immaterial only. Invariably, particularly in respect of large companies, it will be immaterial. That's why you are not qualifying also. You don't have to qualify. Obviously, let us examine any number of items. It might not be attracting a qualification because the interest component, because of the delay between 45 days and 60 days or 45 days and 70 days, is going to be very, very negligible as compared with the total turnover of the organization. In that scenario, but only thing is, please ensure you prepare a documentation to ensure that it is not material. Whether amount due for more than specific days with respect to PPE has to be disallowed. Section 43B is applicable only in respect to deduction claim, otherwise allowable under IT Act. 43B says that amount of expenditure which is otherwise allowable under the Act. As far as this PPE payments are concerned, it is not otherwise allowable under the Act. So you don't have to bother about this. But there is a second school of thought which is happening nowadays, that PP payment also can attract, because ultimately you are claiming a depreciation in respect of those items. But it's what you call humongous matter. It may not have a actual reality, because even if you claim it as a depreciation, that depreciation you anyway disallow, and you are going to claim an income tax depreciation afresh. So in this scenario also, it will not be attracted. So you don't have to report any item of payment which is being made delayed in respect of PPE. 43BH will not be attracted. The company classifies its vendors into trade creditors and creditors for expenses grouped under other liabilities, which amount to be considered as disallowance. It's a standard question which comes to a client, that is auditor's mind. I am very, very clear. It is not to be bothered about it is a trade creditor or creditor for expenses. Once the creditor is an MSME creditor, both the cases, it has to be considered for disallowance. Why I am telling this is, there might be a supplier of equipment. There might be a supplier of expenses. Supplier of expenses directly go to miscellaneous creditors or outstanding expenses. In that scenario also, you have to examine. So please ensure whenever you are going to verify the 43BH, don't see only creditors payment, also see the outstanding in respect of expenses payable account or outstanding liabilities account also, and then you finalize it. Without that, don't complete this transaction of 43BH, which is going to be a serious issue. In fact, in two QRBs, in TAQRB, two cases, they have asked for the information, we provided for the information, they have asked for a clarification, what is your working paper in respect of 43BH? There is a practical question which has been already asked by the institute. We have given the information also in respect of those two parties, not in my office, in another client office, we have given the report. Why I am telling this is, TAQRB is come to stay. Please ensure that you verify that and report it. Vendor due is amount is inclusive of GST and net of TDS. Is the unpaid amount to be considered for disallowance? Once again, this is similar to the first question which has been raised earlier. The amount of due is material cost plus GST. what is amount paid to material cost only is claimable as expenditure. GST is not considered as an expenditure. It's considered as an input credit and adjusted for the GST payments. So I don't have to bother about GST. I'm going to bother about only the principal payment, which is the material cost, which is going to be debited to the P&L account. The ICDS cost was well discussed in the session. I was also hearing that, but I'm just giving you quickly certain items which are very, very relevant in case of ICDS. There's a significant difference in respect of construction contracts and revenue recognition. Definitely, there are some classic differences, and particularly in respect of investment accounting, there is a significant difference. Those differences alone, you please examine because of what do you call? It's already 4:45. I don't want to take much of your time, so I am giving this presentation to you. Please go through that. But last item, which is the proper documentation quantification in Form 3CD, you have to keep it ready. Otherwise, you will not be able to project yourself. I have given this ICDS disclosures here. It's all for reading yourself. I have also given a comparison in the next 2 slides. That also you can go through that. I am skipping this for the time being because of time. I have given clearly what is that in ICDS, what is that in AS. MTM loss, requirement and retention money. I have given a comparison. These 2 items you can go through that and examine whether there is a difference between this and that. Invariably, in case of small business activities, there may not be any changes at all. In case of large corporates, definitely there is going to be a significant difference. Those cases alone, you please examine in an appropriate manner. Otherwise, there may not be any changes in AS versus ICDS. Wherever it is applicable, particularly as per AS7 and AS9, you please go through that in a detail very fast. I have given a comparison for your own methodology. You can go through that. Grant AS12 and all of not much of a certainty. Recognition of contingent and reimbursement claims. AS, unless there is a virtual certainty, you don't have to quantify it. Whereas in case of ICDS, reasonable certainty, they are asking us to claim the contingent expense, show the contingent asset and reimbursement claims. Very, very important. There is a significant importance. You have to do that. And revenue recognition, as I told you, AS9 is definitely a different ballgame. Please go through that in detail. I'm just skipping the comparison. It is very much available. It's pure theory. You don't have to, whenever there's a difference, you will have to examine that and do that. Class 44. Very, very important. Please understand we are on a serious issue as far as this class 44 is concerned. I told you in the first stage itself, as far as class 4, the GST registration is concerned. What are the areas? Paid to GST registered, GST unregistered, composition dealers, and exempt goods and services. None of the accounting software of the clients, particularly by way of Tally, is not having this breakup. Zoho and all also are not having this. Only if it is an ERP methodology, you might be able to get an information in appropriate manner. Otherwise, it requires a detailed explanation, detailed verification. It's going to be a serious issue. But what you can do is ultimately you have to ask for the total expenditure to be matched. That is total expenditure as per the P&L account by way of various combinations of all the expenses. Let it be material purchases, let it be the rental, let it be the electricity, what are all the items you add it, put together and have a breakup for this. In that situation, both are tallying. You are reasonably assured. I don't say you are 100% assured. You are reasonably assured that it is being cross-verified and that's the matter. Then what is the protection, sir? Protection is once again, if you want to have, if you are not at all comfortable, give a disclaimer. If you are reasonably comfortable, give an observation and leave it like that. If you don't have, there is no point in giving a qualification without quantification. So please ensure that the computation and reconciliation is being done by the client in an appropriate manner. The total expenses as per the P&L account and total expenses by way of all these 4 contacts, paid to registered, unregistered, all these things are tallying. If it is tallying to some extent, for example, here it is coming as 23,42,000 and there it is coming as 23,40,000 rupees, you can definitely ignore because the difference is not material. At the same time, if the difference is huge, ask them to rework it, cross-verify it and then do that. Because this class 44 is definitely going to be a serious issue because everything is available in a touch of a button. And the income tax department is going overzealous in ascertaining what all the issues which are raisable from various clients, and on that basis they can do that. Identifying composite dealers is also very, very important, very difficult in the process. but you have to find a way out and do the needful. Determining the correct reporting of capex, especially input IPTC is involved. See, normally capex we directly debit to the respective assets account. We don't verify the vouchers also. Where expenditure we verify in detail. Whereas capital expenditure we don't verify that detail in a process. Now the situation is we have to verify that also, because when you do the reconciliation, expenditure by way of capital in nature also has to be mentioned, and the GST element in respect of those items also we have to mention that. There is sufficient amount of confusions and discussion which is happening. We don't have an option. Please ensure that that is also an issue which has happened. The last but not the least, as far as GST is concerned, RCM. Wherever purchases consist of RCM, how to report. I am not able to come to a conclusive decision so far. But wherever we are going to mention about those RCM cases, we are reporting it in such a manner. We are giving as an additional line and leaving it like that. It's going to be a challenge. Whether it is matching with those items, you please examine, self-examine and do this. But as far as this Form 3 is concerned, GST, 43B, 40A and your other expenditures by way of choosing SST, etc. Not expenditure, capital. These are the 4 items which are very, very difficult to report per se, because related party disclosures and etc. comparison has to happen. And in respect of this GST reconciliation, see, invariably what happens is clients does not do a GST reconciliation. What they do is they prepare a GST reconciliation and leave it like that. The unreconciled items, or how it is going to be reflected, they are not mentioning that. In that situation, you will not be able to conclude. So as far as clause 44 is concerned, if you are not confident, I say state of advice, you better go for a disclaimer. If you are reasonably satisfied, go with an observation and leave it like that. TDS and TCS, once again, very important area, right from 40A as well as 194J, 194C, all these things we'll have to look at it and go through that in a detailed manner, particularly in respect of resident, non-resident, that also has to be verified. Short deduction, non-deduction. As I told you in the initial stages, earlier, whether tax has been deducted under 17B. Earliest guidance note which I remember about tax audit report, they are only asking in a report, wherever it is deducted, whether it has been limited. That alone was the original guidance note. Now this guidance note is also not talking about that. We are supposed to verify whether deducted, not deducted, deducted and paid, not deducted and not paid, deducted and not paid. All the items you have to mention. We have to have a cross verification. We have to examine the totality of this thing. We are also supposed to verify the other items by way of an expenses payable or outstanding liabilities or parties account, wherever it is maintained. All those items has to be verified. There is a classic class of thought. If the payee is not identifiable, you don't have to deduct tax at source. There is a theory which is happening. It is not possible. Wherever in those situations, it might not be allowed as a deduction. Simply, it's not a problem. For example, on 31st of March, I make an ad hoc provision for finalization of accounts. At least at the time of filing of return, which is going to be 6 months by now, definitely this amount would have been claimed as an expenditure or claimable as expenditure or paid as an expenditure. By that time, the TDS element would have been ascertained. You should have deducted, and if it is not deducted, we are under compulsion to report, because if you are not reporting it, it has a possibility of allowance or disallowance. In this situation, even though the program is going on recording, I would like to mention about this particular matter, because many chargers make this mistake. The TDS is not deducted. Obviously, expenditure is not allowable. But the client says, sir, you claim, sir, within 1 month, I will pay it off. Because the tax audit report is given on a particular date, which is, for example, 30th of September. They have a time up to file up to 31st of October. Not about this year. I'm talking about the previous year. This year, 1 month extended. For the time being, forget about this. 30th September, we are doing the tax audit. At that point of time, TDS is not deducted. So you give a report saying it has not been deducted. They pay subsequently. Income tax department will disallow it on the basis of the tax audit report. You have to mention subsequently it has been paid, so that we will have to prove it and clear it off. But at the time of filing of return also, clients come and say, sir, within next 15 days, 20 days, I will pay it off, sir. You file it like that, sir. In that scenario, please understand, my dear friends, you are not supposed to file the returns at all of the client. First of all, let us be very, very clear. Filing of returns of the SSC is not to be required to be done by you whenever you do an audit. When you are doing an audit and you are doing the tax filing also, you are having a conflict of interest. The reality is, in case of small partnership firms and small proprietorship, invariably both is being done at the client's place. They are coming and giving it to your place and you are filing it. In that situation, please ensure that the return filing is done by the client from his portal, client from his systems, and you obviously is going to utilize his digital signature. So please ensure that this disparity is being held. This difference of holding is happening because we are going to have a serious problem in this, because you are disallowing in one particular stage, but while filing the return, you are claiming that expenditure. It's going to be a serious issue. Please ensure that mismatch is being properly verified and did like this. On TDS, as I told you, site, you can go to the tracer site. From that, you can definitely verify that and examine that. But whenever you are doing the TDS TCS, please ensure that the mapping is done between the class 21 and class 34. Fortunately, this tax audit report have these mapping connections. This and that, it does not match. You are bound to wake up and ensure that something is being verifiable or not. Sir, there are some charts which are available. Somebody can look at the charts, and is there any questions? Is there any office bearer who has seen that?
So you want me to read it?
If there are lots of questions,
2, 4, 5, 6, 7, 8.
okay.
Nine.
There are only couple of slides which are available. We'll complete that and then we can go to the questions straight away.
Yes, sir. Yes. Yeah.
So here, I'm talking about the volume of the transactions. There are huge volume of transactions which are happening. In those cases, how do you verify that? It enters into single contract supply, installation, books, etc. How to segregate this from the whole purchase register? Very, very serious issue. We have to. I'm only raising an issue. How it has to be sorted out, you have to examine how it is being done. Next question is post commission paid to foreign agent. See, what happens is these are all cases also which is going to be in your favor. But unfortunately, you have to have the documentation in such a manner. For example, I am paying to a overseas commission to a foreign agent in respect of supplies made outside India. In those situations, it may not be attracting tax in India at all, provided the foreign agent is a PE outside and it does not have a PE inside India. So this we have to examine that at the time of Form 15 CB filing itself. This you would have verified that if you are the auditor, or if anybody else is the auditor, you have to ask for the 15 CB copy and examine whether it has been examined that he is not a PE having a PE in India and it is not taxable in India. Same way, if a foreign agent is trading, is recommending to you a business inside India for supplying to another company inside India, it will be attracting tax. Even though it is not, even though the person is does not have a P in India, it might be attracting because the transaction happens in India. The transaction is related to the business happening inside India. So it is liable for taxation. You have to withhold the tax. So same payment for overseas commission paid to a same foreign agent can have a tax on one side and not tax on one side. Both the items you have to have appropriate documentation to ensure that you are complying with the law, and you also have a proper reporting in respect of those items. Cost sharing arrangements, very, very important whether these cost sharing arrangements are there. For example, there is an organization, international organization, which has multiple units in various countries. So they incur management expenses, they incur patent expenses, and they divide on the basis of the turnover to various of its subsidiaries, whether TDS is applicable or not. It's $1 million question. It is being questioned left, right, and center. I sincerely opine that definitely it will be attracting, because what I am going to do is I am going to compensate for an expenditure which is being incurred abroad, provided there is a scientific calculation which is being done. In spite of that also, it's ideal to deduct tax and limit amount. If it is not deducted, we will report it, let them justify it subsequently, and it is not deductible. With that, we will be able to overcome that arrangement. Payer has disclosed the income in his total income Form 26A update. Once again, in this scenario, this is the next situation wherein TDS is not deducted. Payer has disclosed his income. It is protecting him. He did not deduct tax and source. But as far as you as an auditor is concerned, you don't have an option other than tax deducted, not deducted. You have to report it. When the question comes, they will be able to justify by way of Form 26A. But auditor is under responsibility to disclose that TDS has not been deducted. It is for his protection. It is for the assessee's protection that the other person has paid and 26A has been obtained. Fine. But as far as you audit is concerned, it's better because there is no clause which has been introduced so far. Tax deducted, but tax not deducted, but it is covered by 26A. If a column comes like that, probably I can give a report and leave it like that. Until that column comes, we have to ensure that we report it here. Otherwise, it's a kashta column only. See, this is another item which I would like to go into quickly. Income not credited to the P&L account. Other clauses. Company has interest income on refunds directly credited to reserves as prior period income. Because it is in respect of the previous year, they have a methodology, they have directly taken to the reserves and surplus instead of coming to the P&L account. Whether it is coming to the P&L account or not, that is not your responsibility. We are here to say whether it is an income taxable or not, whether it is an income, natural nature of income. Yes, if it is nature of income, you please report it if it is not credited to the P&L account. Otherwise, you don't have to do it. Interest incomes are different because it is related to the previous year. They have taken directly to the reserves and surplus added there. You are not under a botheration. You have to say that report it. Company follows mercantile system but adopts India AS. Certain FEOC gains bypass P&L account because that's what India is. It states that whenever fair value methodology happens, you don't have to disclose it through the P&L account. It bypasses us. But as far as we are concerned, as an auditor, it is an item which has to be reported. You please report it and leave it like that. It is for the person and assessee to sort it out in the issue. Indian company has a foreign branch income taxed abroad and not brought to India. Should it be reported under class income not credited to P&L account? Definitely, it's a branch. It is not an independent company. If it is an independent company or a subsidiary company, I don't have to bother. Once it is a branch and if it is not credited to the P&L account, we are supposed to report it. Without reporting it, we are not complying with the regulations of the Form 3CD. 216ST, 216S, 216T, etc. All these things are relevant. Please understand they are giving exemptions, but exemptions are not applicable in respect of NBFCs and housing finance companies. So NBFCs and housing companies, if they take deposits or repay deposits, 216SS and T will be applicable. Please report it. Don't skip that. And as far as this single event or multiple event or single transaction, occasion, etc., please use your professional judgment. You cannot leave it to anybody else's judgment. You have to do that. Netting of arrangements, very, very important. As far as same client is concerned, I have received a deposit loan, given a loan. They have netted it off. Definitely we have to report because the question is whether transaction has been settled by way of account payee transactions. If it is not done by an account payee transaction, you have to report it, and how it has been settled off, you can say as netting of arrangement. If you don't disclose the set of arrangements, then you are in a problem. You have not reported appropriately. You are going to have a difficult situation to disclose it at the later point of time. If there is a repayment of loan by a company to its director in cash, is this violation of 216T? As far as company assets is concerned, loan or deposit means deposit repayable after a notice or loan or deposit repayable after a period. Whereas in case of a non-corporate, it is not like that. So wherever in respect of corporates, if it is a loan or deposit repayable in demand, you don't have to bother about 216ST and leave it like that. This is my humble opinion. It's also applicable. There are also cases to support us. In case of non-corporate SSC, it is not possible. Whether it is a demand loan or long-term loan or short-term loan, all will be coming under 216SS and 216T. So you have to report it accordingly. Beautiful question. 50CA, 50CB. Whether transfer of leasehold rights in land and building comes under 50C. Transfer of leasehold rights does not come under 50C by virtue of this decision. But we leave alone the decision. Leasehold rights is not your immovable property. It is going to be once again handed over back to them. So in that situation, it will not be attracting that. So you don't have to bother about it all. Transfer of flat under construction. For example, you are buying a flat under construction. Where if you give it off, whether it is liable for examining under the market value for 50C or 43C as the case may be. This is an important question. It will not. When it will not. It is not applicable in case of booking account only. That is, I have booked the flat. At the time of booking of flat itself, I sold it off. So booking advance alone is being sold. 50C will not be attracted. But once you register even the UDS portion, you don't have to take over the property, but you have done the UDS registration. Then you become the owner, then it becomes immovable property. Until it is getting registered, it will not qualify as an immovable property for the purpose of triggering the provision of 50C. For triggering the provision of 50C, it has to be a immovable property. If it is not immovable, it is underlying immovable property and all, it is not yet amended. So in that scenario, only when it is a booking advance and it is being sold, the decision is also in our favor, assessee's favor. So you don't have to bother about this. You don't have to report also in respect of those items. See, these are all the standards which are going to be directly relevant in respect of tax audits. All the standards are applicable. Please understand, you don't have any escape route from complying with the standards. As I told you in the first stage, 230 and 580 are absolutely important in respect of tax audit. 600 is also applicable wherever you are going to, somebody else is going to do the audit and you are going to do tax audit. 600 is definitely applicable. In respect of 500, evidence is very, very important. Please ensure that materiality absolutely clear. You don't have to bother. That SA 320 is definitely applicable. You decide on the materiality concept. MRL. There are so many clauses where MRL is being mentioned. Whether MRL is sufficient. This is important. All these places, MRL is definitely required. Whether you accept or not, whether the client accept or not, please ensure that you prepare the MRL, get the signature along with the financial statement. They don't even read it, they will sign it off. But without giving that, don't presume that the client will not give all this list of representation, etc. But the icing of the cake is MRL is not absolute protection, but still go further. You have to go further, both for MRL and also for the audit. That is, without doing a proper audit, if you depend only on the MRL, it is not going to help you at all. Please understand, MRL is not sufficient. Sufficient cases are happening in case of Institute of Chartered of India. So MRL alone is not sufficient. But in respect of these cases, MRL is going to create not a insulation, but it is going to create a protection. Insulation, you are totally absolved. Protection, you are not fully absolved. You please examine that. I have already explained a couple of transactions here, but once again, I reiterate on these areas. Wherever these liabilities of contingent nature, etc., please examine. And Chapter 60 deductions, particularly in respect of the assessees. Assessee is having an individual business and also personal account. Chapter 60 deductions are being claimed. You have to report it. If he does not report you, you may not be able to give it. Take a representation and leave it like that. But at the same time, registration under statutes, you can examine whether GST is applicable there or not. You have examined all that. You can verify that. What is verifiable? Please go through the verifiable. Legal expenses, I already told you in respect of contingent liabilities. Please examine that. Without examining that, don't leave it like that. MSME parties, particularly in respect of balances as on 31st of March 2025, please go through that because 43BH requires that only. So this is the summary. Please ensure all the accounting standards are complied with, all the applicable auditing standards are complied. You please ensure that a mid-audit review, because once you send up people for the audit, don't leave it like that. Mid-audit review, you do it, then only you can verify, examine. Sir, better you place this TDS and all still pending, sir. You please pay it off. This 43B statutory dues is not yet paid, sir. Please pay it off so that you will be having a smooth tax audit. Because at the time of tax audit, you dissolve all those items. Even though they pay subsequently, the dispute is going to happen and the cases are going to happen. Devise checklist wherever possible. Have an internal peer review, important, particularly in respect of large transactions. Small cases may not be possible, but small cases also, MRL is required, engagement letter is required. It can be a one-page engagement letter, but please have an engagement letter. Please ensure whoever is signing those papers are eligible to do that. If they are not eligible to do that, don't do that. Previous auditor's acknowledgement, please take it. Otherwise, it is going to be a serious issue. Let us be very, very clear. Feel free to disclaim whenever it is inevitable. You assuming that you are going to claim protect the client, but none of the clients are going to protect us in case of an issue. That is what an important item. A final say, have an exhaustive checklist. Train the staff properly. Very, very important, because you are not going to do any of these items which I have told you. Only our staff is going to do that. Please train the staff. In fact, 3 of the organizations in Chennai have a session tomorrow. The place is overfull. Now already 175 people have been booked. This sort of training has to happen. In fact, my staff had a training in the last Saturday in our office. But still, I am sending those people for tomorrow's training also, because umpteen number of times we hear also, we are not confident of handling this tax audit matter. So train your staff properly. collect maximum substantiating evidence, because evidence is going to be protecting you to the maximum extent which is possible. Have as much substantive evidence as possible. As the other auditor was also telling, take as much screenshots as possible in respect of the governmental portals, because that is only going to do this. Obtain an all-encompassing MRL, even though not an evidence substitute. Evidence is priority. MRL is not a substitute, but it is going to give a protection. Have a holistic view. But whenever you have a doubt, please disclose. My only underlining point is, you don't have to have a doubt. If you have a doubt, better disclose it. The client shall protect himself. Also tell him, in fact, Form 3 CD, you have to definitely get the signature of the client. Without signature of the client, don't proceed with the file. Please ask for that, sign it, and then do it. Thank you very much for your patient listening. I think I have overshot by 5 minutes. Anyway, I have covered all the items. I will go to the chat box wherever it is required. If the organizers permit me to go over that.
Sir, why do you need permission for this, sir? Please go ahead.
Only thing is, how many people are there now?
155.
It should not go down by the time I read it. That's important. A CA
Yeah,
audit 3 branches of a bank, including tax audit, is taken as 1 tax audit or 3 tax. It is 3 tax audit. Branches and head office, if you do at a branch audit, it is going to be 1 audit. If you are doing 3 branches, there are 3 separate assignments. AS 15, provision for gratuity and other liability is not completed by non-cooperative liability tax audit. Whether we have to report under 3CB, if so, where to report. Main report itself you can give, because all the non-compliances of AS, you can give it in the main report itself. 3CA itself, you can definitely say that they have not completed the project. Now, why AS 15? Definitely they will not be covering and complying with AS 22. No non-corporates are complying with AS 22. Deferred taxation. Please report it. The following accounting standards are not complied with the SSC and we are not able to quantify. Please give it in the main report form 3CA itself. Sir, can a person doing real estate business opt for 44 AD income if turnover is below 2 crores? Actually speaking, eligible SSC, the real estate business also comes into the picture only. But I have my own doubt, because when it is a real estate construction activity, whether it will be coming or not, it's $1 million question. But they can definitely take a risk and go for that. Renu is asking this question. So they can definitely take a risk and do that, because it is coming under eligible SSC. So you don't have to bother at all. But if you are able to otherwise calculate that, better go for this other system and go for it. Sometime Anand Parsadi, big man, is asking this question. Sometime property income is offered under business income. If that is the case, how the turnover is to be calculated? Sir, I may be wrong. You have to train me, but you asked this question, I have to respond to it. Once a property's income is shown under business income, the income has to be shown as turnover only. Probably Chennai properties case will come to a difference for you, depending on some other matter. But as far as turnover is concerned, once you treat it as a business income, the rental income will be shown as a turnover only. It will be added to the turnover, even though it's a property income. Whether it is allowable for taxation, whether it is eligible for 30%, etc., that is a different issue. But for the purpose of ascertaining the turnover, in my humble opinion, once you are having the business income as property income as a business income, for example, take the case of warehouses. When you have warehouses and take an income by way of warehouse rentals, better it should be taken as a turnover and show it as a for the purpose, you will be considering that limit also on that basis only. In case of derivatives, if accounts are under audit, what amount should be mentioned in sales and purchase? Audit is getting applicable on. I told already, only the margin of this profit and margin of loss, that alone has to be taken. The challenge is we are not able to get the correct information from these brokers. Ask for the correct information and then do that, because instead of that, if you are going to give a cross amount, it will be a substantial figure which is going to be discussed, which is not right. In case of intraday speculative trading, is tax audit compulsory for profit or less than 6%? If that amount intraday speculative trading also, if it is going to be that like that volume, it will be a business activity, it will be attractive, provided that volume is reached at that point of time. Net figure, net income alone has to be disclosed. Net. In case of MSME dues, interest amount is significant, but the same is not provided, and client says that is our mutual consent and business understanding. Out of these principal amount, some are already cleared with the delay and no amount is outstanding. Beautiful. This question I have asked, Only thing is slightly different is I said interest amount will not be significant. In this case, Mr. Asha Sharma is telling that it is significant. If you are really feeling that it is significant when compared with the turnover, don't see with the profit. If it is going to be a significant the turnover, and if you want to qualify, you qualify it, saying that the interest is not provided, but you should be able to quantify it in all the cases. If you are not able to quantify it, it's only one or two cases, you please take the management representation saying that as per the management is not settling it. As I told you already, MSME vendors are not insisting on the interest because they want business first, then only this interest component. This is the reality. So please give it as a report and leave it like that. In my opinion, I'm 90% sure that interest may not be significant. Because you are talking about one significant case, please report it and qualify it accordingly. For reporting puros creditors, for our reporting purpose, creditors having delivery, it is reported to be net in the balance sheet, please type it. This is disclosure of financial statements, but once again, I don't mind answering it. Purpose, that is debit balance in creditors will be added to the sundry debtors and it will be added as debit balance in creditors only. It cannot be netted as a creditors. If you are talking about the same creditor, if there is going to be a same creditor who is having both business transaction by way of vendor as well as supplier, you can definitely net it off and show there is no problem. Audit is not registered as GST, but based on turnover threshold, GST registration is mandatory as supply is taxable. My God, I don't think it is by any chance it is possible because GST registration is hardly 20 lakhs. I don't know how they are able to do the turnover. I'm not able to imagine a situation like this. Worst situation scenario, you can definitely may qualify in the main report. The SSC is liable for registration under GST has not been registered. You can definitely say because as it is, this turnover is leave alone for the time being. Next year, this tax audit reports and these things is available for the GST. They will be sending a notice. So better you also disclose because if you don't disclose, definitely GST department will also take a plunge on you to have a question on this particular matter. You better disclose it in the main report itself. TDS to be deducted on interest paid to NBFC. Is TDS required to be deducted even when the loan taken for personal purpose, not for the business? When it is a personal business, it is not going to be debited to the P&L account itself. Then in that situation, you are not bothered. For a moment, let us understand for that particular matter, you are not under botheration for deducting tax at source. So in that situation, you can ignore that. But I'm also of the personal opinion, once it is going to be a personal account and not to be claimed as a business expenditure, I don't have to deduct at all. There is no requirement for me to deduct tax at source on that particular item. But as far as tax auditor is concerned, you don't have to bother because anyway, they are not going to claim it as an expenditure. It is going to be debited to the capital account of the particular party. Probably in the information column, you can very well mention, as I was telling you about 3 items. One is information, qualification and disclaimer. In the information place, you can very well mention that the personal accounts are not being reported or covered upon in this area. F&O turnover where to be shown as sale of goods and sale of services. I think this guidance note is also clear about this net figure transaction has to be verified. I am not able to tell you immediately the correct literature. Selva Kumar, you can send a mail to me. I will respond to you tomorrow. Anil Nair, sir, how are you, sir? Client has reflected in his total turnover from house property 80 lakh, business and profession 50 lakh. His total turnover crosses 1 crore. Tax applicability is based on P&L turnover. See, as Anand sir was also asking about this question, similar question, whether is turnover from house property, whether is he showing it as a business income? See, as far as he is concerned, it's only business or profession alone will be attracted. As I told you, when you want to identify the turnover, you have to pick up only the turnover in respect of the business transactions. If you are renting out of house property is your business or not, that you have to examine. If it is not your purpose of business, then this tax audit report will not be applicable. You don't have to bother about that. It's only on business and profession, not on the overall turnover. Bhaskar Rao, good afternoon. Good afternoon, sir. Jairam Kumar, please advise how to get this PPT and early sessions. You have to ask chairperson. They will circulate it. For my session, I will be sending the soft copy immediately to the SIRC. They can share it to you or they will put it to the website. I don't know.
We will be sharing, sir. We will. It will be put on the website and people will.
An export of say $1 lakh, but the exporter gets only 95,000 after deducting 5,000 as towards commission as per LC condition. It amounts to commission paid abroad without TDS. How to deal with this? I'm out of syllabus for tax audit, but still I would like to mention the export of say $1 lakh, but the exporter gets only 95,000 rupees after. For this 5,000 rupees, that person will be definitely raising an invoice or a debit note, something like that. As per the LC condition means to whom it is being paid. The 5,000 is deducted by whom? Is it deducted by the bankers? Bankers will not deduct. Somebody else will be deducting. So deduction is on particular person behalf only. If that particular person is a non-resident, is a foreign citizen, and does not have a P in India, you may not be liable to deduct taxes. So you don't have to bother. It's a commission paid abroad only. But only thing is you have to have 3 items important. This is in respect of foreign business. It is proven in this area. Number 2, there should be sufficient documentation for the purpose of claiming. Number 3, the person should not have a PE inside India. These are 3 items. Once that is there, then you can do it. But anyway, normally it is not done because they receive the money and then go for this. As per LC condition means there is a possibility, but provided we will have the necessary invoices. Excellent, excellent. Thanks for all those people who are giving credit. Can tax audit be voluntarily done even though the turnover is below the limit? In that case, what is due date for filing of return? Sir, it is not eligible because when the tax audit happens, you will have to mention about the specific clauses under which it is going to be done. The due date is already over, which is 15th of September. You cannot postpone it. For the sake of postponing, you cannot. The same thing is applicable in respect of trust also. People say that trust, even though the amount is not beyond that, whether it has been done. We will go under Indian Trust Act and do the audit and file it. In case of private limited company, I mean LLPs, probably you can say that LLP Act it is coming under audit and you can do that. Otherwise, it cannot be voluntarily. Voluntary doing, Mr. Mudin sir, charge as much as possible because voluntary means they should not take it for charity. Will previous sessions recording be available? Already it is available on YouTube, I think so. Balasubramaniam, the client is a non-resident and they are doing F&O business. F&O, there is loss of 2 lakhs and turnover below 1 crore. Which clause to attract in 44 AB? I'm very poor in the classes. Balasubramaniam sir, please send a mail. I will verify the class and give it to you because I don't remember the class by class. I remember only the content matters. I am understanding this. Thank you very much. Thank you very much. Thank you very much. Thank you, Anil Nair sir. After a long time, I'm seeing you on my mail also. I think all the questions are answered. I don't see any questions which is pending.
Thank you, sir. All the recordings will be made available. They will be hosted on the YouTube and you can go to the SIRC website and see the past programs. It will all be available there and all the PPTs will also be available. And I should say that, sir, you went in at supersonic jet speed to cover everything. And so thank you.
But I don't know how much has gone into the minds of the people because I don't have time. 2 hours is short for this, but I have to justify. That's why I had to skip some slides also because what is routine theory, I don't want to discuss on that area. I want
yes,
to.
sir.
That is the reason.
Yeah, totally. I understand. It was really as all the members are, putting it here. It was excellent, sir. Thank you very, very much for taking the time off. And I think you didn't even take a hot water break. So
No. I took a coffee in between.
So thanks a ton, sir. Thank you very much. And I hope we will be able to come back to you for other sessions also. Thank you very much, everyone. You can reach out to us for any further information, send messages, reach out to SIRC. You can send us an email or you can go to the website and access whatever is the PPTs which you need. Everything will be posted on the website and SIRC YouTube will also have all the recordings of the sessions. Thank you. Thank you very much.